I've been up since freaking, I don't know, 4 o'clock. Morning, morning. Big rock hitting me with the raid early on. I'm not even awake yet, brother. Appreciate it. $300 million. As soon as I try to sell, it drops. How is this not over 50? Nah, that's bullshit. Great start to the morning. May kill it today. Well, I mean, it might be an early day with these NVDA calls. If they hold up, I feel like I should just short lock it in. Oh my gosh. I think I will. Powell? Yeah, I don't know. 2 o'clock, 2:30, like normal. What are the odds that NVIDIA gives us all back before they open? Because this is what happens every single time I nail a banger on options. It looks like this, and then it's like, oh, 8 o'clock's here. Oh, 9 o'clock's here. Oh, 9:30. Oh, it happens every damn time. Do the put numbers look like? What do you mean? On NVIDIA? I don't know what any of them look like. Options isn't open yet. The hell is this? open interest. It's nothing crazy, honestly. Yeah, none of this is crazy. Lucid waking up here. Tesla gonna push for all-time highs today. What's up, Buzz? Wow, NVDA officially got 5 trillion, huh? Okay. That ask just keeps walking down, even though it gets hit. It's not at all moving. It's not a good sign. It just walks down further, even though it's getting smacked. It just walks down further. Horrible sign. I had this level drawn, which got me interested, but I mean, jeez. BAER back up. Dude, PayPal is such a piece of shit. All that news yesterday, and it can't hold the move at all. You made money, but yeah. Bought the bottom of the video. It's up 94. Jeez, Buzz. Damn, dude. It's quite the buy. Ever since I went long, this thing has just gone straight down. All right, I'm out. Straight down. Sorry, didn't realize. Straight, just 5 minutes straight down, baby. Great up volume. Oh, that's Jason. Yep. Whatever. I was short Tesla the day we hit the circuit breaker. I don't remember that, Buzz. What was the circuit breaker for? Yeah, that's normal. Or that's not normal. That's exactly the plan. I should be green as long as NVIDIA holds up, which we'll see. It should be like 4 or 5, 3 or 4, 3 or 4K. Yes, jumped when percent came out and paused trying to tear. Oh, shit. Five-figure loss in 3 seconds. Jeez. I mean, how deep 5 figures are we talking? Are we talking like 10,000? Are we talking like 50? Or worse? Jeez. Just under 30? Hot damn. Life of a day trader. Jeez. So Winston disputed. I was pressing closed position. Should have played it differently. I would have. I was lost. Supposed to listen. Golly, that's. I mean, that's just stuff you can't prep for, though. Like you can't take it too hard on yourself. I mean, that was just position crushing news. Taking like a partial, like 2-3. Yeah, I know. I'm thinking about it. And that was kind of my level. This is kind of my level I'm watching here. So extended to the downside, though. Like, I know as soon as I start covering this up, it's going to bounce. But then again, I could lock it in, right? Did I short the bottom? Freaking almost to the penny. I just had to reverse it. That's all I had to do. My level right now is if I can reclaim this, it probably goes higher. But if not, wise key, what's it doing? Still juicing? Wow, gave back so much yesterday, huh? All I do is go short, baby. Hulu and Disney, complete Disney combination. That should be doing way better. Why is there so much selling? They raised to 471. Jeez. CBS juicing. Oh, jeez. Lightspeed has a new trader out. Lightspeed Trader Pro. Since I bought PayPal Kill stock, you can literally see on the chart where I bought. It's remarkable. Kia couldn't move 30 cents for the life of it yesterday, and then just magically it gaps down 35. Gotta freaking love this market, man. So they will think what convinced you, and that's the tell. Does anyone know what Jesus is talking about? Now it goes. Well, that's the problem, Cheese. See, I can try to reverse psychology my own trade. However, it never works. I am the reverse. That's all there is to it. There is no undoing the reverse. It is literally a power that it's like Midas. Everyone else benefits from his gift besides him. It's a blessing and a curse. Blessing for everyone else, curse for me. That is how it works, Narnu. Look at the video. I literally shorted it right here. If you inverse it and it doesn't work, it means you was not convinced it was going to go up. No. I can't reverse it. I can't reverse the reverse. I am the reverse. $5 trillion company. I turned on a dime. Jeez. Turned on a dime. This shit not saved from yesterday. Damn it. That USAR's got me upside down. I really don't know what I was thinking on that. If there's any kind of trade deal with China, rare earth, or even some kind of structural framework, rare earths are going to get killed. Probably should close that up today. Wow, Newegg daily. That's looking tasty. Shiz, I'll work on that. Whoa. Clean Spark enters Texas market with land and large-scale power acquisition to rapidly deploy an AI data center in Greater Houston. So they're getting into data center? That's kind of big. I'm reading this right. Huh. Also, no, I've been watching my trading view data. What do you mean? How do you know where they send and what they send? This thing. Just one more hour, NVIDIA. Can you just like hold this level for one more damn hour? Another 5-minute cuck. And how are you tracking what they track? I went in on that. Oh, so your IT guy told you? That's freaking crazy. Trading Views does this shit? Yarnay, you freaking degen. She's just saying that they track your like data and shit. Potentially cursor movements, things you're looking at, blah blah blah. Real freaking fun. They better not sell it to Citadel. If your screen is connected through HDMI, they can read your screen type shit. Wait, why HDMI? What about DisplayPort? Sons of bitches. That is next level. What about VGA? All of us are going to be going. Son of a bitch, Buzz. Yeah, this candle's a little on the crazy side, man. Like, try to find me another time that the daily chart on NVIDIA looks like this. Like, it doesn't like getting outside of the Bollinger Band, like, ever. Like, this is, I've never seen it before on TradingView. I mean, on NVIDIA. TLDR, everybody wants their shit and they can't produce it fast enough. Got like a $500 billion backlog. It also doesn't say 500 billion in 5 quarters. I was thinking about that. Isn't their revenue like per quarter? Wasn't it 100 billion? So saying 500 billion in 6 quarters is anything crazy, or am I just off on that? Yeah, that's all domestic too, right? Which is nuts, or at least without China. looking this up. $46 billion in revenue in last quarter. Cool. Okay. Funny part is look how we react when it was maybe possible to hit China. Now it's NVDA backs new data center to reduce electricity spikes. What? Dude, what is. Wait, why do I not have yesterday's data? Speaking of nuts, like, this is the last time we kind of, not even, like, yeah, I guess it kind of looked like that back then. When was this? November 2024. So this was Trump election probably. I don't remember what day election night was, honestly. Seems about right though. So the last time the SPY daily chart looked like that was election night. For that, it's been a hot minute. course. Serialize every trade. I'm actually kind of scared of that. Hopefully that happens much later than sooner. Okay. UBS pumping NVDA. I'm surprised we didn't get more price raises today. We got a couple, but nothing like I thought we were going to get. I was for sure going to think we were going to get, a lot. Everybody trying to be the first. Such a bitch. I had 10 of these things and I was like, I'm never going to. Cheese, you live rent free in my head sometimes. I'm like, never going to hear the end of it if this gap's down from cheese. He's going to wake up. He's going to say something like, how about them options that you took a swing on that are now red? And you could have sold anytime between 4 and 8 p.m. if you had shares, something along those lines. So I sold half. Because I sold half, it gapped up. Gambling? I didn't say anything about PayPal. Good God. I mean, nothing can get this thing going. Jeez. He doesn't get financial advice. I'll attest to this in court. There you go, Jesse. Jesse's got my back. Jesse's where. Grab a piece and do it over and over. That's right. Disputed. It's too early for this shit. Too early for this shit. Gaze was getting. Dude, I think you're gonna have an unrest. But that, I mean, that's the playbook. Schumer came out yesterday and said, "We think when people can't buy food, basically, he was saying basically, it's gonna force Republicans to talk." So that's the game plan. See which side it's a game of chicken. Which side flinches first, and people's people's hunger is the game piece. So we'll see how that goes down. People still buy food. Well, they're gonna get food. That's for sure. I still envision. I mean, what an easy narrative. Grocery stores being looted. And the justification is hunger. Yeah, there was news on Amazon. It was about some kind of anthropic expansion and supercomputer completion. This 25 million share repurchase program. Up to an aggregate of 25 million. Maybe. I don't know how they'll navigate it. But we're finding out how essential some parts of government is and isn't. That's for one. That's for sure. Bet you half of America doesn't even know we're in a government shutdown. What's the news on NVDA? See what I mean? Bro.
Boom with Bloom.
Poker. They had a presentation yesterday. It's moon stock. like a glove. Jeez. Always at work in different areas of the government are that feeling the pinch government. Yeah, I got a few friends that work in government too. And they've been through a couple of these shutdowns and they always say the same thing. It's like it's fine for everybody else that's not in government, but if you're in government and you're not getting that paycheck, shit is tough. They get their back pay whenever it opens up, but yeah, tell your people you own your bills to. It's coming. Just the government's got to open up. Yeah. Yeah. Meanwhile, your credit score gets hit. Bills go. Yeah, until the payday loans. And that, it ain't fun, I'm sure. There's an idea. Don't live paycheck to paycheck. Dude, we're living right now and like it's not like it was back in the day. Everything's expensive to live. What if they raise rates today as a surprise? They raise rates? Yeah, not gonna happen. But if they did, whew, whew. Don't buy expensive stuff. I mean, just rent alone. I mean, I don't rent, but I know the rent prices in my area. I don't understand how people do it. First, 30% of your paycheck's toast, right? From taxes, it's taken out. Then you got to pay for rent. Then you got to pay for car insurance and gas and food. Probably a note on your car. Like, I just don't even know how people have extra money. I don't. Dirt and rock now. Oh, my backyard would be double. I know the guy pretty well that did my backyard. I talked to him often. He's like, that shit double. Like, I believe it. The Pope, you're up early. You're supposed to be sleeping. MPLT headline. Isn't that a recent IPO? Yeah. Closing of initial public offering. Some CI. $40K for a 20 by 12 deck? You must have used like Polywood or something, huh? Interesting headline there. Make you choose. If you got Amish builders in your area, man, you got to hit them up. Their prices are unbeatable and their work is great. That's the way to go. When circle jerk end when everybody's come to. Come on, you know how this ends. Everyone's got a climax first. Probably doesn't have them. BC? Is it up right now? Not really. What's up with this fight? Damn. Yikes. $43,000 to finish a 1,200 square foot basement. That's why I did this shit myself. I knew that. Well, I didn't do the drywall, but framing and the flooring, windows, paint. I didn't even want to bother with a quote. I was like, I'm just gonna be pissed. Just gonna do it myself. And I ain't dicking with drywall, so I'll pay for that. But everything else, I ain't paying for. Yeah, that's right. Drywall. Pays that family insurance. Yep. Family members, GC, so that was the easy route for sure. Drywall and mud's easy. I ain't dicking with that. The freaking dust. Nope. This guy doesn't know about a banjo or bazooka. You got me on banjo. Oh, is that what they call that thing? The drywall tape dispenser? I didn't know it was called a banjo. If it costs for a K to build a 12 by 20, I think she'd see me on stilts. 11 a.m. Thursday, meeting with G. It's in the books. This diagonal just will not get broken. So, favorite daily chart today is this new egg, really tight. Inside candle from yesterday. Looking for that 65 break. This is how we do it. We look on a higher time frame or high time frame chart, 30-minute, you can kind of see it pretty clear. We probably get a head start over 64. That's just a pre-market level. The big one is 64.53. Something like that. This might be able to extend through here. Nah. How do you find the charts like in the AM? Do you have a specific scanner you set up? So Arvin Dorks, all I'm looking at is things that's moving either yesterday or today with news. So I use Benzinga and Trade Exchange to get news. One code, if you know, you know. Still talking about freaking pitching. So yeah, it's what's moving from yesterday. I'll keep my eye on. I have a watch list of all that stuff. I flipped through them. I found Newegg because it was on my watch list from a couple days ago after it made the initial move, and I wanted to keep track of it. Today's got a nice daily chart set up. Doesn't mean it's going to break 65, but if it does, I'm very interested. But yeah, I got these news sources for a reason, and they're a big help for morning trading. Just, I mean, you don't need them. Oh, Fermi here. What's up with this news? Yep. Structure takes secure first gigawatt of water to power tomorrow's AI. So they got a contract. Ooh, that's a spread. Damn. So we'll watch this one as well now. This news just hit. This I didn't even see on Benzinger Trade Exchange. I saw it hit the high day scanner like this. Brrr. It's like that might be something I want to check out. Clicked on it, saw the news on E-Trade. Read it. All right. It's on the radar. It's got news. It's got some daily levels that would be interesting if they break. Spreads suck right now, so not tradable, but yeah. All right, I'm going to take my 5-minute break now so I can be back for the open. Since I got this NVDA position, I got to figure out what I'm going to do with. So I'm going to take it now. Not too much I care for in the small cap world. Everything is on, eyes on large caps, besides maybe Newegg, whatever you want to call that. NVIDIA, AMD, PayPal from yesterday. I want to see what that does. Quantum stocks. I want to see if that continues to get wrecked. So a lot to watch. This FI is getting destroyed, man. Missed earnings pretty bad. I don't even know what they do. Fine. Jeez. Hey, Nate, you did not tell him that. Dude, this thing is just getting crushed. I like tell him Tigers lose. Oh man. Kit volume? That's a ticker I haven't seen in a while. Oof. The probability is very low on this. Zero. What the hell are you talking about? Ciru's sending me pictures of like Google Map locations and shit. Talking all shogunny and I don't know what he's doing. Prepping himself for this game that I've never heard of. I don't know what he's doing. Poor guy's profile probably looks like the ETF beta. Yeah, it's nuts. Crusader Kingdom. I don't even know what this is. I gotta look this up. Crusader Kingdom. Kingdoms or Kingdom? It's a board game. The War for the Holy Land. What's the actual name? They're having with that gamer map? Huh? What are you talking? What is anyone talking about? I don't get it. Look at this resistance. Jeez. AMD with some juice here. I don't know what that's about. No reason. Let me guess. This is going to dip and then just rip. This shit. Freaking $2 drop going into the open here. FI just absolutely breaking itself. This should be a $4,000 to $5,000 winner if it holds 208. I just want to put it in my pocket. The market would open up before NVIDIA decides to start taking a shit on me. Lock it in. Well, if I short it, it'll just turn around and go green. How's that? The dump truck is here. Golly. Market's taking a poopy too. $5 trillion official. All right, there's your dip. Are you going to get your rip here? Yep. My chart's not even close to updating. Look at this. We're still in the first minute candle somehow. Just hit 209. Wolf in the scanner. $2 spread on this? What the hell's that about? AMD's flying. Selling the last NVIDIA call. RGTI red to green. Look at that. CCCX, Jason. So NVIDIA's, I think, 1-day max is 211, if I remember correctly. Be interesting if it hits its head on that or actually just rips through it like it's not even there. It's 211. Wow. This failed horribly. RGTI gonna go or no? E-Trade is still not caught up. This is wild. Yeah, shit. The freaking price is 211 and the chart is still showing 210. PayPal has completely filled the gap. FI. Damn. Jesus. This thing is an absolute shit show. Wow. Lowly, let's go, bud. 50 months. Okay. NVIDIA 1 minute. Just can't even trade it because I don't want to be staring at trading view. What is the this isn't even real. What is going on here? This is not what it looks like. E-Trade's just making shit up right now. Can you see it like this? If I did this, can you see this? Yeah, you can. This is the real chart of NVIDIA. This is what E-Trade's showing me. What are we doing here? It's not the E-Trade sandbox because the level 2 is correct. If I look at the level 2, this is correct. 209, you know, whatever. Price is still at 210. Like, how is this that slow? Yeah, I know, right? Holy hell, what happened to LRN today? How did I not see these? That took an absolute shit. No, I did not see the issue with EA games. Palantir, breakity break break. This FI has a 7114 level. Some javelin. Sitting here kind of watching a few things. Oracle default swaps are juicing? Where do you have access to that? Where you got access to that? Bloomberg's got that shit? Damn. Bank of Canada cuts. This RGTI is interesting. It's consolidating quite nicely. Big down day yesterday. It's only a 2-point down. Is it 3? Six. Thank you, cheese. FI starting to push a little higher. AMD, nice. Not the cleanest of breaks there, honestly. There it goes. Still not clean. 89 or 88, I guess. Oh my gosh, Newegg, you piece of junk. This hurt me early. This was me selling. Right back up like nothing happened. NVDA kind of wedging out here a bit. All right, just let that percolate. See what it can do. him sitting on the 200. Last time it was there, it bounced. Is this time going to be different? It's shown that it's bounced last 3 times, 4 times. 1, 2, 3, 4, 5. Damn. Is it going to go? AMD stretching its legs. You got cheese. Playing calls before Powell? Hell no. I just looked away and I got the move I was looking for on RGTI. BE, I haven't seen that one. Very nice. Spaghetti up or down? Well, the play was to the top side there, but it's played out. So I don't know where it goes now. It might continue, but PayPal's trying to finally reverse. What such PayPal? I've been eyeballing it. Not a lot of movement in ETF being the ass for your fund of retirement fund today. It's all quiet. It's all large cap stuff. Uh, 20-cent spread. What? Five seconds! It's okay. It's okay. FI. That Phil was ass. Oh, that Phil was such ass, dude. Well, that cracked it. That didn't do anything either. Bullshit! RGTI still juicing. NVDA ranging. PayPal playing with a VWAP. Watch this AMD level. Markets are juicing. PayPal's trying to put in defense there. It's cuck and go potential here. 211.20. Couldn't miss it. 18. There it is. As soon as I exit, it goes. Soon as I exit, it goes. Jeez, you found me. Clearly, that's me. December 235 calls 655. Damn. Dude, like. Tesla starting to get the juice. That 470 could get reached today. It's that kind of day in this market, it seems like. PayPal trying to hold on to VWAP. That was a nice buy here. Really wanted to get filled there. LRN low a day now. Jeez. What you doing, Nokia? PYPL. Bunch of inside candles here. Pop or drop time. $71.64. That's a cuck. 5-minute cuck coming in here, maybe. I'm touching it. I'm looking at it. 700,000 share buyer. Let's go. And it's gone. Oh my gosh. Nokia high day move potential here. WKEY. Do one share to tilt it. Listen, just the thought of me buying this thing. I did have an order in. I mean, I did have an order in. Maybe that's what did it. Even maybe it's just my orders. That's a theory I have to test out. RGTI compressing. $38.27. 26. Of course, I top tick the freaking candle. I'm out. Nope. What's up with this? Liberty Media? FWONK. Damn it. PayPal coming back up. It's tough. It's a tough trader just because it's so rangy and yeah. Very slow moving, hard to exit. PLTR, nice spot here. Alone? What you got? John Mullen stepped down.
Can you explain viewer attack one more time so people like Cheese can play along when we get a mass attack?
Shut up, Nanny. 33. The Cable Cowboy, 50 years. Is that why that popped up earlier? Oh, now Newegg goes. Now Newegg goes. Yeah, 70-32 on the other side here. Please pull back one time. Please pull back one time. Please pull back one time.
Mass attack starts in
Son of,
5,
I mean,
4, 3,
this is what
2,
we're doing.
1. Mass attack.
All right, fine. No! Newegg, no! Get it in. Get all your digital goodies in. I hit the buy button. Or not. Oh, there's the buy. Thanks, E-Trade. About 20 seconds late here. FI. Let's go, bud. Few more seconds. Get it in. Get it out of your systems. I am a professional.
No! God, please, no! 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 No!
Fix my hand. This guy. This guy.
Roses are red, violets are blue. You look like Lord Fat Quad, and Soil's mom says you flick a great bean too.
40 months, Jake. Let's go. Now Liberty's moving up. They like something. Like, you all playing that? Like, how you do that? Oh, yeah. Fill me at high day. Look at that. Gosh. Every time I sneeze, it gets to where I need it to be. All right, whatever. Get me out. I don't care. Weth is a former runner. You're gonna some. Hmm. Okay. PayPal with the juice. PLTR, a bunch of inside candles here, pop or drop. Hmm. Very interesting level. Mother of God! This is not what they need to be giving you all. Please tell me that's a limited time. Please. Please tell me that's limited time. What do I think of LRN? Well, I don't know anything about the earnings. I mean, obviously, they're getting crushed for some reason. Down 50% on a large cap is never good. So, I don't know what you want me to say. I mean, as far as trading goes, should be active. What? Oh. Thing thumps. I'm buying all yours for it. How is PayPal not moving on that news? Oh my gosh! I swear it knows when I'm gonna freaking click sell. I swear it knows. Am I even green today? I don't think so. $100. What is this, man? Cosmo. Let's go, bud. 30 months. All right. I need to take a break.
Give me THTF and $sign.
Because I'm just losing my shit here.
Yes! Hell yeah!
Give me 5 minutes. Give me 5 minutes to just clear my head, walk around. I mean, walk around. I know what you son of a. Oh, jeez. Give me a second. Mother of God! This is gonna be a long ass year. How many of those did you buy? The Pope? Like, I really need. Oh. He bought them all. So you almost have another viewer attack. Oh my God. How much are those things? What do they cost? I don't even know. How much do those things cost? I gotta look. Cheaper than the beaver? Oh, hell no. $200. That's it? The beaver's $250?
Mass attack starts
Oh my
in
God.
5, 4, 3.
How many of these damn things did this man buy?
Mass attack.
This is gonna take years off my life, no doubt. 100%. Come on. Figure it out, all you Intel people. Get it in! Get it in! Look at all you firing them at the last minute there. The carryover. I know what you're doing. How did that go? Hi. My.
Mass attack starts in
What?
5, 4, 3, 2.
Oh, Jesus.
1. Mass attack.
I am a professional. I am a professional. Have I broken 200? I haven't even made $200 today. I am a professional. Hymns? Look at that. 200 moving average strikes again. Y'all thought I was kidding. How does one attack? No one show him. No one. I don't need any more of this. Are you into press? Oh my gosh, Zach.
Mass attack starts in
What in God's name is this today?
2, 1. Mass attack.
Who? I am a professional. Oh, gosh. Hymns is going. Good. Good. Hymns is freaking juiced. I am a professional. Few more seconds, get it in. This was happening when it was at career day yesterday. Fifth graders understand the stream much better than this freaking guy. How did it go, Nene? What did you teach them? What did you show them?
Mass attack starts in 5, 4,
That's 4 today.
2, 1. Mass attack.
All right, I'm gonna give you my face this time. Come on. Right here. Come on. All over my face. Come on. Huh? Flaccid lightsaber. I am a professional. NVDA VWAP. Come on! There's not enough hentai girls. There's not enough hentai girls. Yes! Yes! More hentai! My mom would be proud right now. No buyers here? There they are. FI trying to go higher today. GPU infrastructure. Shiza, why don't you punch yourself right in the dick, all right? Right in the freaking dick. Thoughts on Boeing? God. Flick yourself right in the balls. So funny. Can picture you all right now sitting in your freaking boxers that you haven't changed in 7 days, sitting there. I'm gonna get them this time. I'm gonna get them this time. I'm gonna go get them this time. I'm gonna get them this time. I'm gonna get them. Sons of bitches. Shut up, cheese. Boeing. Jesus. Saw. Your attack. I officially hate you. gonna have some PTSD from this shit. The hell was I saying? Oh, Boeing. I don't know. They got an incredible backlog, but they've always had an incredible backlog. That's what happens when there's only 2 plane makers in the world, and they're one of them. They're over the 200-day moving average first, you know, and they're holding it, so that's good. I don't know what to think. I could have hedged your puts with shares. Used to work at Boeing, did you? Good work environment or bad? Wonderful. Was this pre-Max or post? Your dad worked post-Max? Qualcomm? I like the daily. It's actually on my watch list. It's got some compression going on here. We probably look at this on a higher time frame. Let me pull that up. It's a tree. 4 months. Let's go, homie.
I didn't know Stockjock was a space company cuz we are going to the moon.
That's right, baby. You can kind of see these Bollinger Bands really getting aggressive here. Range is really tight. That's going to be probably pop a drop out of this eventually. My guess is up. It's just, you know, anything in this space is just going up. GM got a headline or? Yeah, if anything, if yesterday told us anything, if you're in the chip space, you're going to do good. That's high pass. That's Mentherq. You can click on the link and open up a free.
Hell yeah! Come on, baby! Come on! Yes! Come on!
Dude, it's funny that you use that, dude. I'm on season 5 of Breaking Bad. It's been years since I watched it, so I'm rewatching it all.
Mass attack starts in 5, 4, 3.
What
2,
in God's
1.
name?
Mass attack.
I got time like that? I watch it at night. This is why I'm sleeping in now these days. I'm up watching Breaking Bad till 1 a.m. Sugar Rush, you're getting tired of it. I'm the one that's shitting my pants every time they get used. Can I throw stuff at my own screen? Wait, what? Oh, I can. I can throw stuff at my own screen. How cute is that? Hey, I can throw shit at my own self. I'm a poop around in my face. Hey, it's kind of cute. Look at that. I figured out how to do it. I figured out how to do it. For those that still don't know what the hell you're doing, this is what your little screen looks like, your little viewer attack screen. You click the icon, and this is the screen you throw it on. You pick my little face here, and you throw it on my face. Look at that. It works. Which ones can you throw? Oh, I can throw a Bitcoin? Look at that. Wow. Oh, the hentai girl's free? No wonder she's used all the time. Why can't I use this one? Oh, I can use this one. I don't know how I feel about hentai girly myself. Very mad.
Yes! Hell yeah! Hey, come on, baby! Come on! Yes! Come on!
Rewatching Breaking Bad, you really... Walter White is the biggest asshole there is. What an egotistical maniac. I mean, you think, you know, your memory is, oh, he's the good guy or whatever, but really, he's an asshole. I've watched... I don't know how many seasons of Better Call Saul. Really enjoy it. But I think when I binge watched it the first time, it was only up to a certain amount of seasons, and then you had to go to a different platform to watch the rest, and I was like, screw this. So I can't remember where I left off at. But I do want to watch that one. His wife, left or right? Nah. Her character pissed me off, too. VC box? I've seen those before. Do they actually work? You're mad that you sold your 205 calls? I mean, you made money. Made money, homie. It's the name of the game. Nokia might be curling here. Watch this 754 level. Slippin' Jimmy. GM to cut 1,200 jobs at Detroit EV plant, hundreds more in Tennessee, Ohio battery sites, Detroit News. All these job layoffs is pretty remarkable recently. Have you guys been paying attention to that? Let me see if I can find one of the Twitter posts talking about it. I'm 100. Where's the freaking post? I'm 100% convinced that it's. Here we go. Kobayashi letter at it. The AI is taking these jobs. Uh, 48,000 at UPS, Amazon up to 30,000, Intel 24,000. Now this isn't all recent, I don't think, but this is just recently. Nestle Accenture, Ford, or Nordisks. Microsoft has only 7,000. I thought it was more than that. That's a lot. They say labor's weakening. This person gets it, though. It's all AI. It's happening. And then, here's the deal. I was talking to Cheese about this morning. Now we got the Tesla robot, right? $500 a month is what they're going to let you finance it for. Anybody that has a housekeeper is just about to fire their housekeeper and get a freaking robot that's going to work 24/7. So there goes your housekeeper job. Where's the link to buy it? I don't know. That was just what they advertised on Twitter. Mother. All right. So if we got robots in the house, I don't know what it's going to do, but eventually it's going to be able to at least wash your dishes, vacuum, wash your windows, you know, do all the shit you don't want to do. Probably mow your lawn if it's flat enough. Oh, yeah, it's 100% watching you. Yeah, 100%. Alarm systems. There you go. How about that? Security systems about to get wrecked because you got an AI robot in your house watching guard, able to call 911. It's coming. Just think of the jobs. The easy ones, though. Just to start, it's going to start base level. Any job a teenager can do is going first. Now, I'm not Walmart greeter. That job's secure. No one wants to say, you know, have a freaking robot greeter. You need the personal thing. You need the personal touch. However, hang on. There's news here on this VOR. Favorable safety of 48 week China phase 3 open label extension generalized. Okay, not gonna go. Anyway, shelf stockers. They're done. You're telling me a robot can't do that? They already do it in Amazon warehouses. Now you got it just walking around looking, you know, not like the Terminator, but looking decent. And I'm right on the day. This is the day I'm having. Oh, good news. Safety profile is wonderful. Did he say another 2 years? I have no idea. I'm just saying it's coming. I'm saying it's coming. We know it's coming. The weed laser? Yeah. That was pretty cool. Construction, I don't know. That's not the first to go. You still got to climb up on things and you got to think easy tasks. Donald Trump Jr. going to be on CNBC. Transportation. Yeah, well, that's already started. So I hit the freaking button. Yep, it's the easy the easy tasks that are not complex as far as movement goes. Those are toast. And then we get into the issue where margins are going to increase on these companies. They're going to look amazing, but no one's going to have a job to be able to afford any of this stuff, and that's the conundrum. That's where we're headed. So if margins increase and then people don't have the money to pay for anything, then prices are going to get crushed. I don't know what they're going to call it. The wage, but I don't know. Employment bubble? Is that the next bubble to burst? Do I respect Martin Shkreli? Yep. Well, what do you mean by respect? Do I think he knows what he's talking about? 100%. Yeah, fine. Nice move. Jeez. Well, having jobs for education. Oh, education's toast. They're already. What is a school that is already doing AI learning with the kids, and the kids are outperforming public schools by like 20% or something like that? Yeah, I know. I was muted. I was doing a chat GPT voice thing. New egg at 71. Shut up, Buzz.
We will be replaced by robots eventually in many sectors. Population decline equals more control. Get your bread now, boys and girls.
All right. So I think it's called Alpha School. This is what ChatGPT brought back. Alpha School, the AI-driven private school that does core academics in 2 hours a day. with adaptive apps and guides instead of traditional teachers. Reports figure that alpha commonly cite 2 times faster academic progress, with some coverage saying up to 2.5 times. These numbers come from the alpha's internal data and media reporting, not a peer-reviewed independent study. Why do you need a peer-reviewed independent study for that? It's just grades. If you were thinking of... So anyway, yeah. I mean, I think education... What in the world, Jake? Why do I got dudes dancing on my face? And it's very sensual. I think education is one of the first ones that AI is going to be like hailed as, look at this. Because right now, you know, you shove 30 kids in a classroom, all of them learn differently. Different ways of learning, I should say. And if you had an AI that was able to adapt to the learning style and speed of the person that it's teaching, that would be a win-win for everybody. Right now, you have a classroom of 30, you might have some geniuses in there with some people that are, you know, really struggling, and they're all going in the same pace. Someone's going to get hurt in that situation. Is it 45? No way. Classroom's not 45. Putting somewhere and feeding them? Well, if that was the case, you could still do it. You could still drop them off at school and do it. Not saying you have to do it at home. What are you saying? People need a babysitter? But what happened to NVIDIA? I mean, are you saying negatively what happened or positively? My back is going to hurt like a year. $73 more. That is so evil. Literally evil. Geez, did you go get one of those hanger things because you saw it on Batman? You did, didn't you? Freaking no, you did. Bruce Wayne did it. Inversion tables are awesome. I've actually never been on one. You have 97 to vote? Oh my gosh. God help me. FI. Jeez. Come.
Lord Farquaad, scared little man. Clowns come out to play and he jumps like a bitch. Lives off gumdrops and loves to comb his hair. Booster seats for the car and pedal extenders. Necessities.
Good fell. Okay. Maybe not. Play right around here. I mean, today, this is like the multiple gone after I get out immediately. Frustrating. On the Russell? Hmm. Where's yesterday's data? Damn it, dude. Buzz, of course. Is it a place you actually send your kids to, or do they do it at home? If you have a minute, can we do an old squeeze check and kit? Okay, let's look at it. You don't have a squeeze. You have barely any volume. You must be down bad on this, buddy. If I just dying. I don't have anything that's like everything's a bit of a grind right now. PayPal back under the 200 moving average. This thing's just a pile, man. Funneled, of course you can.
Look, stock jockey, you want to talk charts? Fine. But you come at me while standing in front of that museum of bowling shoes? Bro, half of them still have the rental number stamped on the heel. You've got size 9 clown leather stacked like...
This is the shit I gotta deal with.
Look, stock jockey, you want to talk charts? Fine. But you come at me while standing in front of that museum of bowling shoes? Bro, half of them still have the rental number stamped on the heel. You've got size 9 clown leather stacked like...
Shut up, Shred. TKNG popping. Everything feels like it's just in a holding pattern for Fed stuff today. Thought I had a pair of bowling shoes in here. Yeah, because I sniff them in my spare time. Funnel, what should you do? Well, I can't tell you what to do. I will say this. You almost top tick a stock as good as I do. It's on support. This needs a hold. If this doesn't hold, then this is just absolute ass. If you have a lot of shares, you can still covered calls on it. Get some money back while it's moving down. It's a tough one. Quantum. God, Quantum is so weird, man. It just can go. Even though yesterday looked like absolute ass, today, 6% move up. Let's go. Just crazy. FMFC halted? Scared the shit out of me. Is this another Chinese shedder? Yep. Wow, this Liberty Media is taking off. You have 14 golden tomatoes. What am I doing for Halloween? Nothing? Maybe handing out candy? I don't know. No parties that I was invited to. Ooh. She was at the Dodgers game. Who is she rooting for? Is she Canadian? Who won? Was there a game last night? I don't actually know. MLB.com. Series tied 2-2. Wow. And Shohei Ohtani was pitching? I haven't followed baseball in a very long time. But I remember when the AL and NL had different rules for like designated hitter or not. The pitchers had to bat. what's the rules these days? Universal designated hitter. That's stupid. Do you realize how valuable Shohei would have been in that era where the pitchers had to bat? Do you understand how much money? It would have been insane. Rollers baseball was boring, and thank God for hockey. Yeah, but what position would he play the other days? That's a good point. First base? I don't know. I didn't even think of that. So the days that he's not pitching, he's the DH? Is he that good of a batter? I guess so, huh? Yeah, back in the day, if you're a pitcher and you start beaning dudes, guess what? Guess what's going to happen when you come up at bat? Freaking pegging pitchers, man. $1.5 million? Is that what he said? Apollo Globo selling AOL. 1.5 million or billion? Get it off the books. Who's buying it is what I want to know. Billion? He did say billion? Jeez. Who's buying it? There must be some data in there. Watch NVDA. Yeah, but that email ain't worth $1.5 billion. Bitcoin taking a shit. Pull this up. Yep. This will be an interesting spot to see if it holds us. The daily. So the weekly, we got a weekly cock going on right now. This broadening wedge is still very much alive. Weekly candle over candle, daily candle under candle, down here near support. Does this hold? Or are we coming down here some more? I don't know. Look where we hit. 1 day max to the penny. Thank you, Menther Q. 4 hour lower Bollinger Band. Is this it? Are we going to bounce here? You see how much Martin Scarelli is up here today? Nope. I thought I saw a clip of him saying he'd be up quite a bit if it wasn't for his quantum short. What is he up? But he's had some bangers since, especially his like positions that he called out. People would take. He's up 391%. That's nice. Well, what was his account size? I mean, he had a large account size, so that's even more impressive. I think he had a large one. Yeah, it is a different beast when people Benzinga calls out your stuff and juices your entry. Count size in the millions, maybe. He does a lot of option play too, so high risk, high reward. I'm up 194% on the year. Getting there. GPT OSS. Got me. $7 billion data center investment. Genco. Got you too. Boring day. WKUY. Okay. Kind of like what I'm seeing here. Flat top. Ish. How to start selling premium both ways? Really? An A. Verified. Let's go 21 months, my man. Yeah, Elleren's freaking crazy. A lot of support down here on PayPal, though. There's the WKUI break. Should be doing better. Mother of God. There's going to be like 4 years of that shit. All right, you can see it now. See it now. I'm trying to break free here. PayPal juice in here. Up the VWAP again. I'm just trying to find something. See that RGTI? I don't know. It's pretty flat top, but well, we have a video we can watch. Let's get on that. This is 7 days ago, but
Plugged. Today, we come to you from the RMC floor in Munich, Germany. I get to talk to
Ticker
three
PW
different
now
guests
seeing heavy
that
activity,
were
new
there
highs.
for the conference. We cover some amazing things from
It's
emerging
on Omi
markets
Malik's
to volatility surfaces.
discussions on PEW on CNBC.
And the role of artificial intelligence. First, I talked to Keith DeCarlucci, the CIO of the Melgart Macro Fund. Talks about all the emerging markets and different commodity trades that you can use to diversify your portfolio. Next, we talked to Patrick Casley, president of One River Asset Management. He talks about how 60/40 is dead and a lot of the diversification that once used to benefit portfolios no longer works. Last of all, we talked to my friend Hari Krishnan, author of The Second Leg Down, and he gets into the weeds and the future of AI and how that's going to change markets for the long term. Hope you enjoy this one.
Yo, live it up, don't settle for less. You got options. Put your skills to the test. It's your call, time to strike. Make your move, grab the mic. You got options. Execute your trade. You bet your money just got laid. Convex, time to straight the fade. It's the nexus of the game.
Hello, and welcome to another episode of You Got Options. Today from the RMC floor. We're going to walk through a couple different 20-minute conversations to talk about what's hot, what's happening here on the floor, and so with some of the best practitioners around. Today we get Keith DeCarlucci. Thanks for joining us, Keith.
Yeah.
Thank you for having me.
If you don't mind leading us off, giving the crowd a little bit of background on what you do exactly, and then we'll dive right in.
Sure. So I run I'm the CIO of a macro fund that's
Watch
trades
PLTR. It
cross-asset,
actually has a
almost exclusively in derivatives.
squeeze here.
So we trade FX, commodities, and equities, with the exception of we don't do rates like most other macro funds do.
Very cool. And no better time than the present to talk about macro. I think, in the last 40 years, it's hard to find a period where there's more going on in macro.
For sure.
You mentioned you do FX, commodities, equity indices. Talk to me a little bit about each of those. What are some of the things you're most focused on right now, and where you see some of the most opportunities?
Sure. I think what we see as most attractive on the FX side is, investing in some of a portfolio effectively of EM currencies. So things like Brazil, Mexico,
KY.
South Africa, and Korea. Those have all benefited from what has been perceived or is perceived and has been weaker data coming out of the U.S. and softening against the dollar, or the dollar softening against everything. So they have an attractive profile from the interest rate perspective on the currencies, as well as the volatility perspective, because most of those have a fairly high risk premium attached to them. So between the volatility and the rates, it's quite an attractive portfolio. You just have to make sure you hedge the dollar portion of it.
Yeah, absolutely. And let's talk about each of those a little bit, if you don't mind. You mentioned Brazil. What do you like about Brazil in particular? I mean, you mentioned the rates, but talk to me a little bit more.
I mean, it's going to be the rates and the vol that's the highest on both sides that's out there. I think that's alongside of what's been a fairly constructive domestic story, and once you got sort of Liberation Day out of the way, the flows have been quite strong. It's getting to the point where it might be a little bit stretched at this point, but we've switched from having options that had the volatility and the rate portion attached to it to more like just put spreads in dollar put spreads on Brazil, because it's kind of coming down towards the end of where we think it can go, but it's still pretty attractive on a daily basis.
You gotta love the commodity profile of the country too, given the inflationary backdrop, et cetera. Right, which is true for South Africa as well. You mentioned we had a really good bet on this year in Australia for similar reasons there. Different type of economy, a bit more. But yeah, South Africa is interesting too. And then you mentioned Korea. Talk to me a little bit about Korea. It's a little bit different in some ways.
Yeah, I mean, Korea is a bit of a different story. First off, it's not positive carry versus the dollar, like everything else is. But it's much more. That story is much more of a flow.
PLT are going to break down here.
It had been one of the favorites of the macro community being long Korea, and so much so that when it became overpositioned, like we were the other way, short Korea, and then it has massively retraced. So then we use that to re-enter on the other side, and it's a tiny bit technical, but we did that by selling upside calls. So Korea upside in the kind of 2-month area, and that's because there's 7 holidays coming in between there. So that's just an extra little kicker.
Yeah. Korea's super interesting as a location, FX aside, just because of all the auto-callables and all the structured products in the space, historic vol compression. Talk to me a little bit about if that plays into anything that you're doing, or all dynamics there.
Well, certainly on things like the auto calls and stuff certainly play into what we look at on on the equity index side, because it affects all of that. The structured flow is it's coming back. It took quite a big hit in 2020, and it's taken a while to come back. But you now have a different risk transfer happening that used to be a lot more of hedge funds taking that risk off of banks.
Yeah, PC part picker here, Nene.
And now what you have is you have people like Jane Street just taking the auto calls
directly, what you
got. Which is a big change in the structural dynamic of that market. But it's certainly something that we have to look at. And I think obviously with all the chip related things that are in Asia, that also plays into Korea a bit.
How much of the macro bets that you guys are
Solid.
putting on are a matter
Solid.
of kind of being a little bit more agnostic and just finding things that are cheap or expensive relative to history, and how much of it is actually making a macro?
You need to
kind of
not
bet
pay
on outcomes?
$140
Yeah,
for
I mean,
Windows though.
Our macro strategy.
You need to go to
itself
Kingwin
is called
and get a CD
macro-tactical, and
key
it's
or
much more
CD key
trading-oriented.
for $30
So
bucks.
it's usually against positioning flows.
Save yourself $100
Oftentimes
bud.
You'll see things like that are where the direction of travel
And
is
they're
really
legit keys.
consistent, such that CTAs and systematic fully loaded on that direction. And you get the last bit of people buying options in that direction on top of that, so the skew goes the opposite way. That you can take the other side, get paid to take the unwind. You don't even necessarily have to be making the bet that it's going to retrace back. It's just conditionally, if it retraces, it's going to be much more violent on that direction than the other.
Playing the distribution, which is what's wonderful with vol, obviously.
That is the wonderful thing.
Yes, absolutely. You mentioned commodities as well. Talk to me about what you guys are doing in commodities and where you see opportunities.
Yeah, I mean, I think so. Right now, it's a good example of gold has had quite the run, even in the last week, to the point where people are now paying for upside calls and volatility is going up on the top side in gold. This is one of these things where it's very steeply positioned.
$50 for 4 terabytes. Shut your face, cheese. There's no way.
On the unwind.
There's no freaking way.
Get paid to have the
I went to Walmart the other day.
A decent amount.
And when I go to Walmart, I always got to go to the clearance section. I feel like I'm, me, I'm looking for the treasure hunt, the deal. I'm a sick bastard. Speaking of sick bastard, look at me. Look at me. Why am I muted? Why was it muted? That was that haul that you just saw. It was from yesterday. I'm a sick bastard buying more shit that I just don't put up for sale because I'm too lazy, but I love finding the deal. I got thousands of dollars of deals just rotting away in my basement. I'm a sick bastard. I did, however, find quite the find. Found an Orvis leather jacket yesterday for $10. This kind of set me off when I saw that. I didn't need to go into the Squidwell. Didn't need to go in there. Shut up, Fresh. Shut up, Guac. Shut up, Zero. I see this deal. There's no shot that was $50. Safe. Wait, what? If that was $50, you should have bought every single one of them that they had. Why didn't you buy every single one of them, Cheese? One per person. Did you buy one? Good God. Anyway, found an Orvis leather jacket, brand spanking new. This is like a, I don't know, $200-300 jacket whenever it's sold new. It's like, yep, that's mine. Whatnot.com. What about it? I know what Whatnot is.
It's very difficult to find any.
Anyway, what I was saying about Walmart is I went in there the other day and I saw that they had some electronics in there. I was like, well, that's weird. Usually it's glue sticks and freaking toys of some sort. And they had 1 terabyte sticks for $38, Gen 4 Samsung. I was like, sold. I already sold it. Sold it the same day I got it. Bought it for 38 and sold it for 60 something. Easy. You're telling me there was a 4 terabyte version you did not buy? Just didn't want $200, huh? Free $200.
Coverage people,
Vintage
papers
hi-fi.
that aren't bullish gold at this point.
Right.
So usually when that happens, we're
In
the
my
other way.
mouth.
So an interesting point from the data, we've done historical analysis on different commodities, particularly during the last period of rising interest rates, 60s and 70s, 65 to 82 type period, just to kind of study what does best and how does it perform? What's the distribution? A lot of people know that gold was the best performing asset from 65 to 82, right? That's pretty common knowledge. What most people don't know is it was also the most volatile asset.
Yeah.
And so the thesis to own long.
Do I use an iPhone, Anthony?
A wonderful one, right?
Anthony,
Especially 300% ago.
Do I like shoving my fist up my asshole?
And I think from a macro perspective.
And telling everybody how wonderful it is? No. There's your answer.
Longer term pressures of rising interest rates.
I love those scalps. General question. When you move such amounts of cash on a daily basis, what itch does those 30 profit trades scratch? It's it's the margin. So I don't know why, it gets exciting to me to turn $5 into 20. However, I don't do that part because you'd have to sell it, and I don't want to spend the 5 minutes it takes for each item, or 3 minutes. Like, I'm pretty quick at it. It's the margin. It's the same feeling I get when I get 100% winner on an option play that Cheese tells me not to take. It's the same kind of feeling, knowing that you got some kind of deal. Oops.
Things like commodities are
not a 1 week, 1 month, 1 year bet even, but if we think there are pressures with kind of the Fed takeover and all the structural geopolitical issues we're seeing,
maybe not my
potentially
fist.
higher interest
What's
rates.
this?
That 60s, 70s period is a very important one to understand.
Yeah.
And one of the things we find during that period is equities are even more mean reverting than any other time in history. From 68 to 82, I don't know if you know this or not, equities actually went nowhere in nominal terms.
Yeah.
So long-term volatility was awful in terms of a hold, right? Long-term volatility was a massive sell. But short-term volatility, due to all the geopolitical crises and everything that happened in between, was actually higher than history. So there's actually a macro framework that could say if interest rates go higher, you could see increased short-term volatility, but due to the nominal illusion of equities being priced in nominal dollar terms, you could really see a lot more mean reversion. So a really compelling trade actually. This experiment.
I mean, we've been through lots of wars and lots of crises, and I think we have a pretty good handle on how to hedge it. Largely, we'll be long convexity in the front end as a starting point to hedging, as well as strips of all the way up the curve of the VIX options to protect the term structure. And I'm talking like up to the 100 strike calls in VIX.
Yeah, let's talk about the long tail part actually a little bit more. So you said you're doing a strip of long dated calls?
No. Shorter dated calls, but high strikes. The really teeny stuff that explodes in an April and that kind of stuff.
Yep. As you and I know, the price of those don't even matter.
Yep.
At the end of the day, it's the most convex moment on a distribution.
Yeah.
And when something does actually happen, the price of those is, offered at nothing, right? Like at infinity. So couldn't agree more. Those are things that people try and sell to buy something else on a relative value basis, but more often than not don't realize that it's the ultimate imbalance in supply and demand on the planet. Tend to outperform on those type of moves. And then what else do you do against those?
So that's for very deep crises like this little bit of April that happened, or 2020, 2008. And then we need to protect sort of like the 5 standard deviation kind of moves. And for that, we use a product called variance swaps, where we're very short dated variance swaps, so 1 month and under duration, and short some plain vanilla strip of
Members,
options
keep in
against it to
mind, coming up
neutralize
at 2
the
p.m., we do
outright
have
volatility
the
exposure.
FOMC
So that leaves you with a
announcement,
convex profile
followed
of
by
the
the
swap
Fed
versus the linear
chairperson at
profile
2:30
of
p.m.
the
As
option.
always, members, you do
So
know
that works very well.
we do not speak
And,
over Fed
Yeah,
Chair Powell.
and again, very few
At
people
that
understand
point,
that in the
the
general
trade
public. But
exchange
again,
clock will
a
radio
great
silent
kind
unless
of
there is a
well-established
major
trend.
Noises.
breaking during his
give you
press
on a
conference.
relative value
Once again, at
basis
2
a really
p.m.,
nice
we are
convex tail
expecting the FOMC
without the
announcement,
carry
and we are expecting a 25 basis point cut.
most times.
And I would add, it also, another thing that it does that tail strategies have a problem with is it monetizes, because you re-hedge every day at the close, and that effectively monetizes every day everything that happens in a day.
Yep.
So you don't end up with like a March 20 happens and you're up 35% by year and you're flat.
Right. No, there's a perfect match between the two strategies in terms of duration and timing. That's a great point. Yeah, really compelling stuff. Last question before we go.
All right.
If you have one opportunity that you think is particularly compelling in the next year, and we'll talk about it next year at RMC if you're here. Is there anything on your mind?
I mean, we already sort of talked about it. I really think it's consistently trying to harvest the carry in the term structure, of the equity thing. That's been very persistent. I mean, it's not as good as it was in 2021, but it's still pretty good.
Yeah.
And I don't expect it to change because it's fairly structural.
Yeah.
You just need to be able to hedge it.
And as we mentioned, particularly in this environment, and when you get that kind of match, that's really compelling. Thank you, Keith.
Thank you
for joining us. Welcome back to You Got Options. I get Patrick Casley here today from One River, one of the bigger thinkers in the space. I've actually been looking forward to this conversation for some time. Thanks for joining, Patrick.
Yeah, thanks for having me. It's always nice to get here in Munich and around Oktoberfest. I forced a nice pun on stage yesterday about a beer stein that was well received. So
I like that the bubble.
Yes, the bubble. That's right. So
you want to tell everybody what that was, just so
it was a reference to the optimism in equity volatility specifically, but just markets more generally. You tip the beer stein, and I was referring to the classic German movie Beerfest 2006. And
classic.
Yes, it goes back to the. So, anyways, you tip the beer stein or das Boot. It's a glass boot. And you can visibly see a bubble forming in the toe of the boot, and that air abscess, as it travels from the toe to the main funnel, creates this gurgling. It overwhelms the drinker. You fail the boot chug. So you kind of try to turn it to prevent that. And I think that's just a good metaphor for people and how they think they can see the bubble forming in markets. And there's any number of metrics one could pick to elucidate that bubble, but they think they can get out of the way. Yeah. So there's no need to preemptively hedge. I'll just react.
Yeah. Welcome to Voltoberfest. Yeah, no, I think it's clear, like,
just the DOS boot.
You know, we're in some type of a bubble. Speaking of bubbles, but I think there's a lot of academic research out there that clearly states that trading in any period less than a decade based on fundamentals is an incredibly poor indicator.
Yep.
I like to think of it as a risk management tool. Valuations, I've given this analogy, are like, if you're on an airplane, it's your elevation off the ground. The elevation doesn't really determine which way you go. Liquidity or gas does, right?
Members watching the crypto markets,
but once that gas stops,
hitting new lows
for whatever
of the day
reason,
now,
which it invariably will,
Ethereum as well.
then all that matters is how high off the ground you are, or how how high that elevation is. We're full of metaphors today. But I do think that's a really good way to think about it, and I agree that bubble's kind of in the boot. The question is, when and how will that come, and that's where risk management comes in, and that's why RMC. That's why we're all here. The big question is, how do you manage risk in the context of not really knowing when that bubble is coming down, and let's talk about that a little bit. How does One River do that? How do you guys think about risk? Let's dive in.
Yeah, One River we're a hedge fund, but we're also I would say allocation advisor to an extent. So my title is president and head of solutions. So we do that. We concoct solutions all the time. So the real kind of, if you were to make it
1 for 100 share consolidation effective November 3rd. That's Charlie Juliet Echo.
Uh-oh. Uh-oh. Reverse split. Is this a purging of the greatest proportions here? Or did we already purge it? There's one left? Chicka bow wow. Wait, these all sold? Is that what these were? Yeah, I think these all sold. The Purge boys. The Purge. Oh, there's one hiding down here. Oh, there it is. All sold for 100%. I need to start deleting those things. Well, guess what? We have a purge today.
Into a problem set, you would probably say, how do I create one pool of capital such that I don't care if we have a right tail or left tail? And that's we're in a two-tailed distribution right now where people can really, we've witnessed and seem to continue to be witnessing with this Oracle announcement, this right tail melt up, the ability for large cap stocks to gap up 30%. It's just not normal, but it could be our normal for a number of quarters or even years. So you can't really afford to abandon beta. Certainly can't afford to abandon beta and lead against it at the same time. The foregone compounding could be too great, right? Especially in this benchmark aware world, right? However, whenever the dam breaks, it's probably going to break violently. So the metaphor I also used on stage was sumo wrestling. I think I've even heard you reference this one. You have deadlocked heavyweight opponents. You have bulls and bears. No visible kinetic energy, loads of potential energy in the markets. It's a very apt one. It's very true. So the way that we navigate that is we actually say it shouldn't matter where you are in the cycle. How do you create one pool of capital? It doesn't care. So for us, we think I try to find high average return, negatively skewed assets. You need look no further than equities. You want it to be passively long those in a low leverage way. And then against that, you want to be actively long, positively skewed assets. And you want to do that in a leveraged way. And you do those together. What's beautiful about that is you can convert those equities into futures, be very capital efficient. So $100 of equities, maybe you park $7 in margin, you have $93 to play with. You can buy VIX futures, VIX options, S&P straddles, equity index straddles, a host of things that are defensive. Put those together. Yep. So, for us, that is the way to do that. You're
unbelievable.
And you can be very active. And so
this is a cuck and go that cocked and dropped.
Dynamically participating, reduce the beta drag.
I'm about
even if
done
you're not
for
great at that, you're probably going to compound pretty well.
This day sucks.
I tend to agree. I think the one, it's always good to have a little bit of disagreement, and we all have different perspectives. I think the one part of this that I want to have people think about more in this environment. You mentioned the right tail, right?
Yep.
In this environment, not only is institutional short interest or the underweight is significant,
yep.
which tends to happen right before in a bubble,
yep.
for obvious reasons,
yep.
Which in a supply demand basis is more likely to drive a squeeze higher, if we are to go higher. But on top of that, vol is very compressed, partially because we've slid 40% off the lows,
yep.
Which has driven us as well with all the ETFs, right, that are issued, all the call writing, everything that we're seeing out there has also driven this vol compression.
I killed PayPal. So look at that thing dump.
Coming out of a summer,
yep,
into an end of year where there's a lot of releveraging effects and all the things that we know that drive a lot of that seasonality. And you can't help but think that going into a midterm year with historic, policy coming out of not only the Treasury, but likely the Federal Reserve merging.
Sure.
It's hard to say that the right tail is properly valued at this point, given all those things. And and so instead of operating from a beta perspective, and then taking in convexity on the downside, I think there's a great argument for replacing equity with out of the money calls and right tail. If you look at that distribution, equity markets are left skewed.
Yep.
So you're getting a discount to get a right tail that you could argue could actually be bigger than the left tail, although the left tail will eventually come, at least in some medium term outcome.
Can hold a level.
Agree, generally speaking, that vol. I think we agree that vol and using that dynamism of vol is critical in this juncture, and kind of given how it's structurally compressed relative to the potential outcomes in this environment.
Yep.
I think we both agree on that. But I think in this environment, that right tail is really at a discount globally.
Yeah.
In a lot of assets, by the way, not just equities. But yeah.
And a lot of people, when you're right in that a lot of people also don't appreciate that when you go buy an equity future, you do pay away cash to own that future. So you're going to have a pretty discernible 4% drag on that. So the S&P's up 10, the future's up, 7.5. Right. So you get that headwind as well. For us, I think the important caveat is the clients that we advise, large institutions, sovereign wealth funds, they are anywhere between 85 and 95% of their risk coming from equities already.
Right.
And so for them, I would say it would be pretty silly to engage too much right tail behavior. For the typical retail investor, I'd say they're actually more underinvested than overinvested at this point in time. So, for me, I use the F1 car port, too many metaphors, but
I love David Drudge's metaphor. Go ahead. Let's hear it. Yeah.
If you're going to embrace positive convexity, negative correlation, you shouldn't just put really good brakes on a car and drive at the same speed. Otherwise, you're just slowing yourself down. You need to drive faster as well.
Yeah.
So you could do that through additional leverage on the long leg to kind of compensate for some sort of beta drag or theta bleed. Or in your example, buy out of the money calls. Right. And then you're convex to the right and left tail.
Absolutely. Yeah, you can do it a couple different ways. And I think you make a really good point. For a lot of people, for somebody like me, that it's easy to deploy. But if you're already long equities, there are tax considerations to selling. There are also mandate issues, right? But to your point, and David Dredge, who we'll have on later as well, talks a lot about this. You don't just need the goalies, right? You need a heavy attack to pair with that. And I think particularly in this, leptokurtic kind of fat tail environment, I think that's critical.
For crying out
Let's
loud.
pivot a little bit.
Nay!
Kind of generally
TONX,
assets, equities.
strategy. We see
Do you guys have
recommended letter from the NASDAQ
views
for violating
on
shareholder
outside of
approval
equity
requirements.
land?
That's
Do you guys
been
play in
lost in November
commodities,
straight.
interest rates, FX?
TONX.
Talk to me if so about how you guys look at that and how
The
you
Pope!
Yeah, we do high level. We're about 90% equities because our clients are about 90% equities. But across our firm, we do less convex but more defensive stuff like multi-asset trend following. We have 160 markets. We trade more or less everything under the sun: credit, commodities, FX. But the way we calibrate our trend models is to be defensive. So we're not trying to be the highest Sharpe ratio trend follower. Far from it. We're actually trying to be the most complementary to convexity. And so if you look at the reliability of a long volatility, our style of long volatility,
They're honey roasted
really
peanuts.
the instantaneous, the big drops, the reliability will fall off if something gets more long in the tooth. 2022 is the prototypical example. Luckily, we read a paper in 21, so we look pretty smart about it, to say that you should complement trend with convexity for the reason of an erosion of portfolio value. So we think macro assets are actually best rewarded over that kind of time frame. I call it the slow twitch muscle. So you have the fast twitch muscle of convexity there in the concurrent drawdown, the slow twitch muscle, which is there for the erosions. So we're constantly long kind of implicit out of the money options, these kind of trend following portfolios that will really ride the wave pretty aggressively.
So I think you've heard the sumo analogy that I gave, and you mentioned that earlier. I'll take one from you. I think I heard a couple of years ago, or maybe a year ago, is we live in a world of nominal illusion.
Yes.
And the reality is, I think very few people realize how critical inflation and real interest rates play into risk. You mentioned correlation, equity bond correlation breaking down in 2022. People have broadly for the last 40 years, and really it didn't exist until 40 years ago. I want to be clear about that. This 60-40 portfolio and the concept that those two things are counter-correlated and will protect you in risk is really an artifact of the last 40 years. If you take 125 years of history, you actually will find that there's zero correlation benefit between stocks and bonds, which blows most people's minds, actually.
Sure.
0.35 sharp for a full equity portfolio for 125 years, and 0.35 sharp for a 60-40 portfolio over 125 years. So almost no difference, essentially no difference.
And we've seen 2 times that since, over the last 20, 30 years.
Correct.
0.7 sharps.
Absolutely.
Which is obviously not the norm.
Right. And we understand why that is, right? Historic Federal Reserve policy. And the question is, can that continue into the future? And there's a lot of big question marks about that. And I don't think we need to dive into the structural arguments of why that may or may not be the case. But I think you have to realize that, there are structural factors that could very well lead us back to a normalization to more long-term trends. Again, looking at the last 40 years, interest rates top left to bottom right, and using that as your data set, I think we can all agree is probably not the right data set to be analyzing.
I think sometimes the simplest charts are the best, and we make this chart that's just a rolling 15, 10, and 20-year S&P excess of cash return.
Yep.
And it's simplest chart, but it gets us a lot of engagement. Over the last 100 years, we've been where we are now twice.
Yeah.
Once was the tech bubble. Okay, we know the best allocation choice would have been to hide under your desk for 15 years, embrace convexity and trend for sure. The other time, however, was in the 50s, post-World War II recovery. And we spent the subsequent decade crashing through all-time highs.
Yep.
More or less incessantly.
JKK, Jack
it just goes to show that
to offer
just because we're at all-time highs, this is your right tail argument. And I think you're absolutely right. So whether your construct is levered, passive beta, out of the money calls, you need to find a way to not run away from beta and be defensive at the same time.
Yep.
Otherwise, you're going to be making a short-term call on long-term data. And that's one of the worst things you can do, that mismatch.
So I started in 98. So I started right as kind of the tech bubble was going. And I think this will bring full circle some of that right tail argument. For the last 2 years into the tech bubble, the best trade by far and the easiest was to own long-dated calls and equities, like out of the money.
Yep.
Right? Those calls were way too cheap. Market up, vol up. Didn't happen just in brief instances like we've seen more recently, but it literally happened 8 out of 10 days for 2 years.
Right.
So it was a great way to capture right tail, make money on the way up. Hedge, by the way, you could sell stock against it.
Sure.
On the way up.
I'm not drinking chips.
On the way down.
Peanuts.
Kind of a general megaphone into increasing rallies, which is what tends to happen for a lot of the reasons we've just discussed, right? So I think that, again, not to hammer on that idea, but that is a compelling argument. If you look to the 60s and 70s, though, to your point about the 50s, yes, we did hit a lot of highs along the way starting in the 50s. But again, nominal illusion, a lot of that was just a function of structural inflation.
Yes.
If you look at 68 to 82, 14 years at the end of that cycle, in nominal terms, we went nowhere.
Yes.
Yeah, glue is rough right now.
However, we
gotta wait for
up to 50%, like towards the end of that.
Another hour and a half, really.
The max, I think, was a 13-year period, 50% in real terms decline.
Yes.
I mean, that's not many people here could sit around and imagine a 14-year period where they lose 50% of their buying power by being in a 60-40 portfolio. And again, so valuations themselves aren't deterministic, but over longer periods of time,
yes,
in real terms, and I think that's the key, not nominal, it tends to be very predictive.
Yes.
So a lost decade in a sense isn't just nominal necessarily.
Yep.
It's really a question of real.
Yeah, I think when stocks and bonds fall at the same time, drawdowns become the real drawdown becomes pretty eye-watering pretty quickly.
Yeah.
2022, the peak drawdown there was about the same trough as the GFC. Entirely different composition.
Right.
On the 60-40. Completely. But in fact, the bond standard deviation was much more significant, obviously.
Right.
But the drawdown for that portfolio was the same.
Yeah.
Right. And I think if you revisit things like 73 and those types of the Yom Kippur type drawdown, if you shock portfolios today with that, we've raised the hypothetical. There's 4 quadrants of economic growth and inflation. You say, well, there's inflationary growth, which is intuitive, and deflationary recessions are intuitive. Yep. There's deflationary growth, which we've lived through. How about inflationary recessions? And And when you kind of see prices meet that marginal elasticity to their peak, but they can't go any lower because people are not going to operate at negative margins. It's irrational.
Yeah, and you can't help but see some of the stagflationary pressures that would drive.
Yeah.
And so agreed that's an outcome that not many people have thought about much for 40 years.
Sure.
But you can't help but see that at least the probabilities of that are higher than they've
Sure.
been in the past.
And I love the euphemistic language that slips in. You talk about inflationary recessions, and 95% of people I talk to come back with stagflation. I'm like, no, that's stale growth
Right.
and
Yeah.
inflation. I'm talking about a recessionary inflation, which is more in the 70s what we saw.
Correct,
right?
and that's exactly what you end up seeing in the 60s and 70s.
Yeah, you're going to see some
Completely agree.
real growth assets lose ground at
Right.
the same time nominal prices increase.
We need a new term for that.
Yeah.
What's another? We'll have to come up with that. But last thing I want to kind of touch on before we kind of wrap up here is, I think an important idea that very few people are looking at in terms of risk. These days we have $500 trillion. Let that sink in. $500 trillion of long assets.
LRN.
That's stocks, that's bonds, that's private equity, private credit, real estate. That's
Wow,
global.
you're right.
That's a eye-watering number. And at the same time, we have as non-correlated assets, and that's hard to define exactly, but in that number, I put precious metals, I put crypto, which is arguable,
Sure.
and then structured products and things that fall in the structured product umbrella. In that, I'm including all the new ETFs, all the buffer funds, all the things that people that are all at this conference do. And then I'm adding in hedge funds, right, broadly. And I get hedge funds are, again, tend to be more correlated than not, but they have a generally non-correlated exposure.
0.7 correlation, but low beta.
Yeah.
Sure.
And so you start putting those all together. Those assets are only about $15 trillion now.
Yeah.
Now, the caveat to that is people will be like, wait a second, precious metals are 25 trillion. How can that be? About 20 trillion of precious metals.
So now it wants to go.
In safes,
Sure.
untouched, not accessible broadly. So I'm really counting that as 5. All of that 15 is up from 5 just 3 years ago.
Okay. Got it.
And the reason I say all this is they all have about doubled or tripled in the last 3 years. And that doubling and tripling of assets for all those is not a coincidence. They're all coming, in my opinion, from the same sources, which is people looking to manage risk and diversify in a world where bonds do not diversify risk.
Yep.
So big picture, 500 trillion on one side,
Yep.
5 to 15 on the other side. Where do we think we are in that? And so I want to highlight, solutions like we're talking about, which is an element of that you can put that in the structured product hedge
Yes.
kind of part is critical. And I think increasingly critical. People are just early adopters are figuring that out.
Sure.
But we've yet to, other than 22, see any real reckoning there. And I think I just want to highlight that as a major risk.
Yeah, I think every asset in a sense can be viewed as a trading pair with the dollar.
Yep.
Right. And when you have dollar stability or regime mean reversionary forces.
Sometimes when he doesn't mute his mic, you can hear it.
The dollar will rally against it. And that's another way of saying it lost value.
Yep.
But when you're in a reflexive regime, which is the opposite of a mean reversionary regime, you see this tripling of non-dollar assets over a very short time period. And that reflexivity rise to more reflexivity. And then there's some sort of crescendo.
Mother of God!
Crescendo personally, but it's also the hardest thing to predict in markets.
100%. I think it's safe to argue, at least I think so, super early, given the 500 to 15 kind of trillion type reality and the fact that we've yet to really see any of that mean reversion
Don't
yet.
you freaking laugh.
It's a pendulum.
Yep.
So once it starts to swing, it can really get going in the opposite direction.
Yeah. So all these dollar off ramps and the exuberant price moves we've seen, I don't love forecasting asset returns, and so I really don't. But I think if you're looking to hedge real losses, equities are tempting, but real assets have to be a big part of your portfolio, certainly bigger than they've been. I remember back to 2015 when commodities were
start pounding your own dick,
parity
to Pope.
that I was, helping kind of manage and market on behalf of AQR, and nobody wanted to touch them because it was basically just levered bonds, and the only other thing you were embracing was real assets. Those types of portfolios, especially anything that elevates the presence of real assets in the portfolios, it's probably a decent allocation regime to think about in a reflexive dollar off-ramp regime, which is what I really think we're entering.
To your point, you know, hard to say with conviction that it's definitely going higher or that it's an incredible bet. But what I think is fair to say is it's a great diversifier at this point.
Double ball, golden tomatoes, all in the face. Classic move.
But they sure do respond to supply demand.
Right.
And when you have that kind of supply demand imbalance, probably not a bad place to be allocated.
Yeah, and you see, I mean, just forward multiples at what 24 on the S&P, trailing multiples flirting with 30. I don't know where the CAPE measure is, but it's got to be flirting with 40 now, which is basically all-time highs. Everything else is 50.
God, you're full of shit again.
It's median or average. We're clearly on borrowed time. Of course, with the caveat that borrowed time can last quarters and years.
Sometimes.
And that's in a period of time that matters for investors, especially when nominal costs are rising the way they are.
Absolutely.
Right. And so it's a very tricky time to make pivots. I do fear that people will lean a little bit too hard into the equity risk aspect, fearing the right tail, but fail to kind of appropriately calibrate the left tail.
Yep.
And that's broadly what we've seen with a lot of allocation shifts of late. Not ubiquitously, but just on average.
Yeah.
So we'll see.
Yeah. No, the key is thinking about it distributionally, right? And I think that's what's really hard for people to do. When they think about beta, they either need to reduce their beta or improve their beta. The reality is you can maintain.
I got some beta for you.
Right. Maybe even get leverage to the right tail while still protecting your left tail. And I think that's where we are in this cycle. And wonderful talking to somebody who gets that. Patrick, thanks for hopping on.
Yeah, thanks for having me. Appreciate it.
Welcome back to another episode of You Got Options here at the RMC floor. Third conversation for today. We got no other than Hari Krishnan. I remember almost 9 years ago reading his The Second Leg Down
Jimmy
book, written a bit since then as well. But no better person.
Oh, that reminds me.
Tail hedging, market dynamics, and where we're going than Hari. Welcome, bud. Good to see you.
It's great to see you, and couldn't be happier than to be in Munich and to be chatting.
Hang on a second.
Yeah.
This reminds me. I don't know what this pop's about. Before we purge, someone said that for the past 4 years, Roy Kitty has tweeted on International Cat Day, which is tomorrow, if I remember correctly. Is this true? Because if so, it's today. And he's tweeted every time at 4:20 p.m. Doesn't matter if it's his account, Cheese. If his account's tweets, that's all that matters. Wrong day. International Cat Day. No, you're thinking of international. It might be National Cat Day. I don't know. When is this? October 29 in the United States. So it is today. National Cat Day is today. Do we need to... All right, we got to do a deep dive. This should be pretty easy to find his tweets. He doesn't tweet ever. If it's this easy... I mean, there's a lot of call activity on GME. So we're looking for posts. Okay, well, this is bullshit because he didn't even tweet in October of last year. So there's that. Chewy was June 27th. All right, well, this is out the window. Someone was just trying to get everybody on Earth to buy Jimmy calls. That's weird. All his previous posts past prior to May 17th have been deleted. Damn it, Reed. Wait, what? Happy cat day on Reddit under avocado in my anus account. All right, give me some links here. Let's look. Happy cat day, everyone. COF. Yeah, he did liquidate it last year. Well, we'll see. We'll see. Hymns going. Well, we're back to green now. Hey, $100. Mushrooms. MNMD, huh?
Can understand fully why that is. I think it's pretty clear if you look at the data and where it's happening, that's happening specifically to those working in field.
There you go, Sudi.
Technical expertise, not nursing jobs, not service jobs, not teaching jobs, really. Really programming, accounting, legal, across the board there. So massive wave, and it's happening way quicker than people realize.
Absolutely.
I think. Here in the derivative space, I think it's so important, and we're seeing a lot of quick changes as a function of options being relatively complex. People like you and me have studied or worked for decades, right, to kind of fully understand these things and to rise kind of to the middle top or the top or whatever of our fields and be able to kind of discuss these and understand these products. But their growth is tremendous as people look for more non-correlation and understand them more, and there's more network effects. My view is that AI is really going to help the broader audience move more away from a two-dimensional stock, bond, commodity investing type exposure to really access more the distribution of each product, to be more precise with their positioning and adopt what I feel like, and again, I know you drink the Kool-Aid as well, a superior way to position, a more precise way and flexible way to position. So I really see it as a coming revolution, not just for AI, but for options, structured products, anything that involves dimensionality, and democratizing it in a sense. I know that's probably going to sound like a little bit of wishful thinking, or the question is about timing. But tell me what you think about that, how you see it. I know you have a little bit different view, but would love to hear your thoughts.
Well, I have a strong view. It might be incorrect, but again, I don't have a crystal ball. If you think of machine learning, there's kind of a wide variety.
Where's your
of fields
gold and
where
silver
it's
going?
always getting wider, and in some
I
areas
don't know.
it's been
Definitely pulled back. We'll have to see where it settles in.
Driving, if you are able to control for the impact of mistakes, all the way down to
Dude,
finance.
TLTR.
Finance is actually the kind of the frontier, or financial returns predictions is the final frontier in some sense of machine learning, because the signal to noise ratio is very low. And so
I actually have this level marked. It's a big pivot point. You can see the resistance here, broke through, bounce here.
Just futures.
Needs to kind of hold it.
If you can be right 52% of the time,
220 call it.
trade a lot, your Sharp can be immense.
Yep.
But even getting to that is tricky in lower frequency contexts using machine learning. So
No problem, Con.
Yeah.
And one of the big challenges is, as you build a machine learning model, you're always playing a trade-off between something called model variance and bias. So in finance, what that means is you don't want a model to be too biased, in the sense that you don't want it to always be long or always short. You want it to change its positions dynamically. Conversely, you don't want a model to be too unstable. So if you input a slightly different data set, you don't want the model to do something totally different.
Right.
The trouble is that for markets which tend to go up, like the S&P, at least in recent years, model variance is a big issue, and models simply want to be long a lot of the time.
Yep.
So I know there's a passive revolution. I know that there are lots of other factors driving. I know that liquidity measures and so on are indicators of ramping up equity markets. But I think the technical models that are increasingly used, maybe we have that, as you put it earlier, momentum aspect.
Big tech. I don't know. I don't even know who's got earnings today. The main focus right now is Fed rate decision, which everybody thinks they know.
Yep.
And the outlook is what I think is going to be more important. And then tomorrow, which is Xi and Trump, and the headlines that come out of that. We're definitely in a headline exposed market. So the risk is headline, and news and ER goes into play with that, I guess. But as far as earnings, I have no idea.
Yeah.
And options allow you to do that.
How much of that is just a function of the data set, right? I mean, obviously, any intelligence of any kind, when only given a certain amount of information, will have, poor outcomes if they don't have the full picture. How much of the argument that it's not good is that we just haven't had enough data points, or that the tails in particular are underrepresented? And what if we were to take a much wider lens and at least drive enough simulations
tariffs
to create a broader data set? I don't know. Just love to.
Work packages.
Well, tail risk, which is a topic close to your heart and my heart, and Dave Dredges, who will come on at some point.
Economy, air traffic, or supply chain. That's EADSY.
That is one of the areas which is hardest to apply machine learning to, because machine learning tries to tease out fine structure.
Someone's buying some shares down here on LRN.
Of realizations. The stuff that occurs at the tails doesn't happen much, by definition.
Mm-hmm.
So machine learning models don't have much to grab onto. And so buying the tails, which is something that I guess most respectable market makers, dealers will do just to keep going, is the defense against statistical unknowability, I guess. And so that's an area where you can combine machine learning and options. So you could have a futures program where you do all the statistical stuff. You aggregate huge masses of data, you do cross-sectional pooling, blah, blah, blah. But then at the tails, you just play defense. And that's the cost of doing business. And I get the suspicion that a lot of people in the industry who are sophisticated using these models are doing exactly that. And you might not see it in terms of options activity at the tails.
Can you explain level
As
2 size
but
column?
more clearly in terms of very tight risk.
Yeah, so that's just how many shares. That's all it is.
So positions that have been working
This is
for
the
a long time
exchange.
just get flushed out.
This is the ask.
Not only
This is
just
how many
outside
shares
those
at
things.
that number.
And that creates this sort
So,
of
like, let me find something slower.
interesting
So this is like
situation
106
where
shares at
options
85 by
Shares
this
of
exchange.
getting a poppy.
Arca was another exchange, has 66, 85, 100 shares.
but within the belly of the
This is
distribution,
someone's offering
everything
on the
else is
bid, 500 shares at
not modeled, at least
$66.52.
knowing in current
Size is just the
conditions.
share size.
And do you think, I think what you're implying is that those participants who are increasingly using these things are not only
You look at something with like
poorly modeling those things or can't use
Ford,
them well to model them, but
it
because they
says
can't,
17,000,
are
you know, on
reinforcing
these blocks,
Absolutely.
21,000,
Absolutely. I mean, if you have
13,000,
an edge
26,000,
and
19,000.
your edge doesn't apply to outsized moves, you just get out.
yeah, you just cut your risk, and that obviously just
And
forces
we're seeing a
greater
lot
tail.
more of that.
Yeah.
And we discussed this previously
No
as well,
problem.
but short selling has become more difficult, or at least index short selling or short bias strategies have become more difficult as a result because cutting risk doesn't only apply to the downside.
Right.
It applies somewhat symmetrically to up moves as well.
Yeah, absolutely. You know, I think it's particularly relevant given that, you know, the last 40 years have been really up until just a couple years ago in 22 maybe have been fairly one note. I mean, there have been short periods of volatility, but volatility has come and gone quite quickly. We haven't seen also until 22 break down in any way with correlation. There have been ways to manage risk and to handle things, which is quite unique, honestly, to longer history. I mean, if you look at hundreds of years of market
Salt,
history,
go for it.
not just in the U.S., but also outside of the
Or
U.S.,
somebody.
you know, the last 40 years is a bit of an anomaly in the context of a bigger picture.
And it explains a lot of the dynamics we're seeing now. So we see a rich
Someone put up
VIX
a-
term structure. Why? Because I think there have been more instances of the VIX popping from a low teens level in recent years than we saw previously.
Absolutely.
And so people are playing defense there. And that is not contiguous, and it's not consonant.
Cheese knows
with
how. Well,
what's
Cheese
going on
doesn't
in
know how to
S&P
do a
options.
poll.
So there are lots
He
of
could figure it out,
dislocations
though.
where
I believe in
VIX
him.
might be rich, but S&P offers value either on the upside, perhaps, or even on the downside in certain spreads. And that's created a lot of interesting situations that may not be resolvable. They're not really arbitrages because the players who could do the arbs are not positioned in such a way to do those particular ones.
Yeah, I mean, I think I always find the 1987 event that drove essentially the creation of skew in the indexes as fascinating. Most people don't know that
I can't figure out how to time someone out less than 10 minutes.
until the crash in 1987.
That's right, yeah.
Options were created in 1970. Like the SIBO was created in 1971. Put options were created in 1973. But there was no skew until 1987, 88.
Yeah, that's a great comment, and it is historically true. I wonder if there's an analog today with the call skew for the S&P.
That's right where I was taking this, absolutely.
Well, you kind of tipped me off, so I'm going to give you credit for that.
No, absolutely. I mean, I think we've started to see a significant, compression of vols on the upside that as a result of not seeing any structural inflation of any meaningful lasting time, due to a very stable monetary policy and regime, and a broad geopolitical regime, really for the last 30, 40 years. It's interesting that we're seeing those things, that stability of policy change dramatically, but without a reaction. And I really do think it'll take an event to do that.
And that's a great point because if you go back only to the 80s, let's say, and you try and look at S&P earnings multiples as a function of inflation,
Predictions
you
up.
see something that looks a bit like a bell curve. So high inflation is bad for equities, low to negative inflation is bad for equities, and there's a sweet spot of 2%, let's say. And it all fits beautifully together with the Fed's recent thesis and so on. But that could all change. That's not a written in stone fact at all. Even as it is, it's statistically noisy.
Yeah.
And so high inflation could actually be quite good.
Gamble, gamble, gamble. What's the
Agreed. It all
prediction
depends on
for?
what kind of inflation.
Where does the
And
SPY
we're
end
also
at
talking
4
about
p.m. today? Oof.
especially in a regime, by the way,
At or over
10%,
688? Under
of
688.
all the
Let's
top 10% of all
go.
earners constitute more than 50% of all consumption
Yeah.
in the United States. That could be something that where the wealth effect is more important than ever. And if you drive liquidity to the top with lower interest rates, that
And there's a double whammy, though, because if the top 10% are generally older, which they are, and it was previously assumed that older people consume less, the effect is even more dramatic than that.
Yeah. I started in the business in 1997, 98. And so my first several years were market up, vol up. Probably the only, other than briefly in 07 outside of the U.S., really the only time I really saw that for a continuous long period of time. And again, it was
PayPal going to do something here?
of market up vol, which most people don't fully appreciate. So I've kind of been wondering if and when that would ever come back again. And I can't help but feel that slightly different some things rhyme, like Federal Reserve policy and whatnot, which we can get into. But really the amount of short interest, the amount of retail involvement, obviously the power of narrative, all bubbles are built on a very believable idea that this time is different. And where you're let off with AI, like I can't think of a more powerful driver of that narrative. So in the face of that narrative, retail involvement, very aggressive coming monetary policy likely, given that the administration is taking over the Federal Reserve. All the ingredients are there again.
Well, I'd like to make a cheap comment about that this time it's different. I'm actually quite sympathetic to young people, because if they didn't believe this time is different,
what hope
they might
is
think
there?
that we're going to get old, we're going to get old and sick, and then we're not going to do very well at the end.
Yeah.
So they have to feel this time is different. It just doesn't really apply to financial cycles which outlive all of us. So, yeah.
And by the way, it could be different. We were talking about tails, right? Like, the reality is there may not be enough data. It's possible, but that possibility is what drives the exuberance and the drive to some extent.
Well, I think one of the most interesting case studies will be what happens to the crypto vol surface over time. Yeah. That is a very nascent surface. It used to be flat and high.
Yeah.
What contours will it take?
Yeah, let's talk about that a little bit, because I don't play as much in crypto vol.
Nor do I.
Yeah.
So speaking a little bit out of field. But
I definitely think, by the way, and this is a little tangential what we're talking about, but that there is a massive right tail convexity, as we've seen in crypto, but also extending not just to crypto. And now, again, we've seen it recently in precious metals. We talked about
gold,
that for years.
sure, platinum.
Yep. But across any asset that is really perceived as any type of a diversifier, people don't realize the growth that we're seeing in structured products, which I often talk about. And in structured products, I mean also the ETFs and the buffers and all the things, right?
Yeah.
Which are all very related. That's gone from 500 billion to 2 trillion in just 3 years, which is pretty amazing. Hedge fund assets broadly have gone from 2 trillion to 4 trillion in about 3 years. Gold has tripled in 3 years. Crypto has tripled in 3 years. What I don't think many people have connected is all those things are connected.
Absolutely.
Yeah.
I mean, even if you
For
take the
sure.
hedge funds piece, if the bulk of the flows are going into the pod shops, and the pod shops have very tight limits, risk limits in each pod, what are you going to do other than chase a winning strategy and bail out or get bailed out if things go against you?
Right.
You have to do that. You can't be a long. That's where the opportunities lie for some of us.
Yep.
Thankful.
Absolutely. But all of that's, you have 500 trillion on one side, and now you have up from 5 trillion, 15 trillion
WVE popping up again.
diversified assets. But that's all happening in the context of just a warning shot in 2022. Not really. I mean,
And it was a mild decline. I mean, it was significant in terms of distance, but not in terms of speed.
right. That's exactly right. So, I mean, I can't help but feel like, talk about right tail events. We're already seeing it in those assets right now. And that's before the liquidity push coming from an activist Federal Reserve likely coming, and an active administration. So you can't help but wonder, how fat should that right tail be, and how much of that can not just continue in those assets, but even translate across all assets going forward. And all the time in the context of structurally compressed vol on that tail. It's the harder part, honestly, is owning the left tail because it's expensive. Everybody needs it. Everybody's long assets. Everybody needs it. The cheap part is the right convexity. And because of that structural imbalance of long assets for short assets, we have compression on the call side. But again, I think that's exactly at the moment, right?
Place to play.
Yeah, it's the place to play. Anyway, we kind of moved off of the AI piece a little bit, but I do think that AI also could potentially play a role in that.
Well, we do a lot. Well, just to summarize the AI piece from my perspective, we do a ton of AI or machine learning. I won't glamorize it in various guises, but it's always dedicated to median return outcomes. So the need for options never goes away.
Right.
You have to look at median return outcomes because these are pre-leveraged numbers, and you don't want to be glued too much onto rare events.
Right.
Because machine learning requires very repeatable patterns that occur many, many, many times. Fine structure cannot be found from a sample set of 10.
Yeah. No, I agree with that. The question, I guess, ultimately is how durable is that weakness?
Final
in
trades
the
on
models?
CNBC,
And,
FTAI,
like you said before,
NEE,
I don't know that our edge, our views, the contextual
FTV on a conference call right now getting wrecked.
Will go away in a year or two. But I think it's safe to say with stronger models, better data, that you could, in theory, also start modeling more complex things like that, which are actually more valuable, in the sense that it's hard for most people to access that, maybe even you and me at times.
I think it's hard for me as well, but of course there'll be windows of opportunity in these spaces.
Yeah.
The reflexivity of markets, though, will always create something new.
That is not going away.
At least that's our hope.
That we can agree on.
This is your new employer, is it really?
As always, thank you, Hart.
Thank you, sir.
Always a pleasure.
You got it.
All right, taking a piss. Be right back. I didn't take a shower. I laid down. And I think I fell asleep. But it took so long. I was like, what's the point of rushing back right now? Just so I can go get chopped out in another trade? Or J Powell opens his damn mouth, moves the market a certain direction. I don't even have my head. I don't have my headset on, the Pope. I don't have my headset on, the Pope. Get wrecked. Decisions in 10 minutes. What did it say? That does or does not cause autism? I couldn't hear what he said. KVUE. Couldn't understand what. Kennedy saying not enough evidence. Not enough evidence. Just suggestive studies. All right, well, that's all they had before. Both sides in the full headline. Yeah, it sounds like it. Now, if you give me $500, though. This is the company that owns Tylenol, by the way. We have time for one thing, though. What am I missing here, Cheese? Is there more? Just mute. Okay. Oh. 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 I saw you saying news. I was like, what? Did I miss something? Ladies and gentlemen, it's time. Muting Discord. You see, we have a purge today. The fall of Seajet. There are a few things more tragic in the ETF me and the ass viewer fund and retirement fund than watching a once noble ticker turn to dust. Today we mourn the fall of Seajet, and with it the purge of one of our most veteran degenerates, the holder, Chicka Bow Wow. Though he may still stay in the halls, he will be stained forever with this purge. He bought on October 2nd, 2025 at 18 cents, believing in the dream that those before him journeyed and successfully completed. The same dream that lifted this very ticker to legendary heights once before. It already written stories of glory, crowned champions, and filled the halls with the 100% Club with celebration. But the higher they rise, the harder the rug gets pulled. Today, the company behind Seajet committed the greatest sin of all. They announced a reverse split. An act of desperation. A betrayal so severe it triggers the ETF me and the ass viewer fund and retirement fund's highest punishment. Immediate purge. No appeals. No grace. No mercy. Reverse splits are the cleansing fire, and Seajet, once a hero, has been consumed by it. And so, we bid farewell to Chicka Bow Wow's Seajet entry. A valiant soldier struck down not by poor trading, but by corporate heresy. The ticker that once carried him to the promised land now lies in ashes, joining the countless fallen in the graveyard of reverse splits. Seajet. I smite you! But as all with purges, we remember the lesson. The market giveth, and when greed stirs, it taketh faster than you can refresh your chart. Once a vessel, oh! Was a vessel of victory. Now another cautionary tale. May your memory serve as a warning to all who dare trade in your shadows. Fed rate decision here. 30 seconds. Shred, nothing to see. Nothing to see, Shred. Here we go. 10 seconds. $25 is expected. The outlook would be interesting to me. $0.25.
25 basis points as expected. Once again, the FOMC does cut rates by 25 basis points as expected.
How many said half a point?
Members, posted in the news desk as well is a link to the FOMC announcement.
One dissented in favor of. Oh. Fed says it will stop shrinking balance sheet on December 1. Oh boy. Oh boy. I think there was a few last time. Right, Shred? This is now the second time we didn't have unanimous. Yeah, restart E-Trade. Two in opposite directions.
Members, on the dissents, we had one dissent favoring a 50 basis point cut, and we had one dissent favoring a no basis point cut.
Lisa Cook, maybe. Market's flip-floppy here. All right, 25 minutes to the presser. For an ARAM. Nice. You're shocked these gaps are still there? Give it time. AWS and Microsoft have any issues? Great. Down we go. Why is this up? Yeah, who knows when it'll get filmed. It will, though. Might not be this week. If they come out all kumbaya, which I expect them fully. Government IT transformation. Oh. Interesting. See, my CU opens at 2:10:34, minute and a half. Market had a seizure. Yeah, this is what it does every freaking time. Move one way, move the opposite direction, right back to where it started. Now the real move happens. Whichever way that is. quoting 450. $442. Under 450 would be nice for a pop through it. This is a very small float. 40 seconds. 428,000 shares. Over 5 could get fun if it happens. 10 seconds. Two-minute halt. Unless it shut up right at the last minute there. Polymar. Oh, I'm sure there is. I've saved in my browser history adult toy thrown at WNBA game. Jeez. Listen to these freaking degens. This is some of the bets on the breaking news page. Will Trump and President Xi shake hands for between 6 and 10 seconds on October 30th? All right, let's look for Powell. This might be the easiest freaking bet. Oh my gosh, these people are freaking degenerates, man. And you can get the live feed now? Oh my gosh, dude. Check this shit out. So you got your live feed here. Will he say inflation 40 plus times? Not a no shot. Hey. Yeah, there's no shot. 50 times? There's no way he says inflation 50 times. I don't have an account. I can't take any of this. 60 times! Get the hell out of here. There's no shot he says it 40 times. How does it work? They say there's an 83% chance. That's insane. He doesn't say it 40 times. You kidding me? 40 times. So I assume the way this works is you put down 83 cents to make $1. Or you put down 18 cents to make $1. I assume that's how it works. Or is it 50-50? You double your money. I don't know. That is how it works. All right. That's like a freaking no-brainer. It's like no money. $50,000. I mean, it's enough. There's no shot, he says it 50 times. This is a 40. Get out of here with these. I don't know how it works, but it's just no shot. Tariff. Stagflation one time. Good afternoon. This is the no-brainer here on the yes. Oh, pal saying at his news conference. There's no way he says Trump. Oh, it'd suck there anyway. Sorry? No shot, he says sorry. Oh. This is open. That's some sell pressure there, man. Fires now? Yep. I got such a shit fill. Freaking A, man. Absolute shittery. Getting out. $400 loss. God. And then it goes right back up. I'm back to $100 on the day. I can't win today, man. This is like one of those just hang it up.
My plans of creating a pro league team was foiled by the Tylenol news.
Yeah, there's not much movement today. It's all kind of chop. It's a lot of buy support kind of stuff today. Now, this is interesting. When is this open? Oh, 7 seconds. Oh, 10-minute halt. 314. Wow. That's quite the gap. Yeah, halted down here. This went right back up. Well, we got the presser in about 12 minutes here. 11 minutes. Last two halt ups have dipped hard, popped up, and then sold off there. This one dipped, popped up, sold off. This one might be different. It's a 10-minute halt, and it's gapping up over pre-market highs. I don't know. Which is $3. $15-minute halt. Jeez. Nope, just kidding. Still don't trust it. Jeez. Whoa. It's a false halt. I'd add more, but I don't trust this thing, so I'll be happy with just the few shares I have. Man, I was like, oh, break $3 out of the halt down, break $3, I'm buying. Nope. False halted down, shot back to high day. $357. Let's go, Cavitate. Damn. Cosmo, I got some beef jerky. It's actually a really good price for grass-fed beef jerky, and it's delicious. Son of a bitch. Son of a bitch. SJ in a T12. Freaking A. I mean, without fail. How is it 321, 320? Shut up. Is it really? So it's going to gap down on me? How is T12 not blocked anymore? Like, what happened? Just my mod bot decided to go on strike, join the AI revolution. $335 is better. Certainly not no 360. Shut up, Wang. Snowflake, that news is out from this morning, I believe, right? $339. Thank Darcy. $10 pop. $10, 10 cent. Wish it was $10. So we are looking at 28.37 here. 28.37, just in time for Fed shit. 3:30. Shit is moving around quite a bit. Please be 52. I don't think it is, though. All right, here we go. 10 seconds. What's the final verdict here? 25 or 40? 3:30. All right. 1 penny gap up. Can we get a high day break at least? Screw it. I don't want to hold during another halt. Give me my...
Momentarily, as we mentioned, the trade exchange, we will be going radio silent on the squawk unless a major breaking headline.
Coming up
Thank
in
you,
less than a
Deval.
minute, Fed Chair Powell.
Luke, what's going on? $20 says their audio sucks. Man is on time. 5 seconds late though. I want count how many times he says whatever it was. Inflation.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Stable prices.
Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains...
It's as loud as it gets. Their volume's always ass.
In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
I can tell you right now.
Available indicators suggest that economic activity has been expanding
inflation
at a moderate pace.
because the main goal right now
GDP
is
rose at a
employment.
1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily
always
reflecting
purple
stronger
weather.
consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown.
Say transitory.
In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions
Poker,
of
it's as
job
loud as it gets. Their
availability
volume
and
sucks.
firms'
I've got
perceptions
it
of
cranked.
hiring difficulty continue to decline.
Just turn your volume up.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services.
Disinflation is not
Near-term
inflation.
Measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
9.
In the near term, risks to inflation are tilted to
10.
the upside,
Shit!
and risks
Calm
to
down!
employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls
this
for us to take a
looked at
balanced
Polymarket.
approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
Whoa.
Far from it.
That's news.
Policy is not on a preset course. At
Basically
today's
saying
meeting, the committee
no
also
rate cut.
decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions.
How are you sure, jeez?
Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up
let's go
relative
give
to
them
the rate
5.
of interest on reserve balances. These developments are what we expected to
Are you
see
short right now,
as the
homie?
size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the
Here we were with Trump, and
Treasury securities.
Trump was going to dump it.
Thus,
Members, on that
Powell's like, hold my
downtick,
beer.
just a quick interruption on Fair Chair Powell. Powell says strongly
The Fed has been
differing
assigned
views among
2 goals
officials
for
on
monetary
how to
policy:
proceed
maximum
at the
employment
December
and stable
meeting. Another
prices.
cut in December
We
is
remain
far
committed
from
to
assured.
supporting
That's where we got our
maximum
downtick
employment,
in
bringing our
markets.
inflation
Going back to
sustainably
Fed Chair
our 2%
Powell.
goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
I hope you're killing it, C-Bus.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Great question to start us off.
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee.
Geez, light 'em on
Everyone
fire, brother.
works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals for a very long time.
Shred, you were wondering if your gaps are about to get filled?
And then that has changed now.
Hold on to your britches, Buttercup.
After the July meeting, we saw the downward revisions in job creation. We saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management.
This is some horseshit.
And I would say
talk
the same
about changing your position in a month and a half.
Going forward is a different thing.
Claire Jones, Financial Times. Thank you for taking this question.
Yeah, with no data, right?
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion.
I'd
like to just dig into
what
that
an amateur hour move here.
What sort of arguments were brought up? Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody.
We're still at 12,
I would say
right?
it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll feel they'll forecast faster or slower progress on one or the other, and they also have different
Is it
levels of risk
13?
aversion. And people.
Why does it say
some
12?
will
We're
be
counting how
more
many times it
averse
says
to
inflation.
Inflation
there it
overruns,
is right there.
and some will be more averse to
see
underruns of employment. And
if we would have won our
put
poly
that
market bet.
together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, they're very disparate.
The over-under
views,
was
and they
40.
were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here.
Yeah, you changed.
That it's not to be seen as a foregone conclusion. In fact, far from it.
Far from
Just a
it!
quick follow-up on QT. How much
This
of the,
guy!
The fund impressions we've seen in money markets are related
A
to the
month
US
and a half,
Treasury
homie!
issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be, to be holding on to get the last few dollars because, again, the balance sheets, the reserves are going to continue to shrink as.
Why are you shitting on me?
So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second-round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, and we do have, we get some data. The labor market is a place where we get, for example, we get the state-level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah, so we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's like 6 weeks away. We just
16?
don't know what we're going to get. If there is a very high level of uncertainty, then
I thought it was 15.
That could be an argument in
16.
favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call
great
the other
question.
way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it,
I know, right, Mr. Battle?
does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration.
We're still nowhere near 40.
This is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle. Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down.
What are we talking about
to come down. So if you remember,
see, were you playing the game?
Years ago, that's the one that we kept expecting it to do that. Now
19?
It's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways
Frando, it was because
last
of
few months, but
the doubts on the
significant
December
part of
cut.
that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate,
20.
people have different estimates of what that is, but it might be, 5 or 6 tenths. And
Halfway
so
there.
If it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further.
21.
But it is that it will be a one-time increase, and we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think
22.
We're watching this very carefully. I think it's not the
This
case
dude
that
placed
we're
a
just
bet right
assuming
before he went to
that
talk.
it's going to be one-time inflation. We understand fully this is
23.
a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And
24.
especially when we're seeing potentially labor
Yeah,
supply
23. What is it?
challenges.
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation, yeah. Well, again, the part of services inflation that is that
25.
isn't coming down as we would like it to is the non-market part of
She's his handler.
services.
She's the one that
overall that
is keeping
that's
track,
just
and
something that we expect will come down. The
that was just
non-housing-
code.
the
She said
non-market
inflation
part
3
should
times.
come down. It largely reflects.
That's code to him.
higher
You're
stock
halfway there.
prices
Keep
and,
going.
Financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that
It goes to about 3
and
o'clock,
there should
maybe
be
a
no
little
question
longer. It
that
depends.
that's where we're going.
27.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in
If he
AI
starts hammering the
infrastructure right
inflation,
now,
inflation,
and
you know it's
wondering
freaking
if
cooked.
the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of
Big spot
investment
here for the market.
there or market
618
bonds?
fib bounce
How
level.
is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run. It's
Kapow, gifting out 5. Let's go,
This is
bud.
an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how
You
those
and
investments
C-Bus
will work
making
out,
some
but I
money
don't think
today?
they're particularly interest
On that move?
sensitive compared to some of the other sectors.
Go, bud. Calls
And
the
then just a
bottom.
quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you
Is that funny
give us a
when you
sense? I
heard
think we
40,
know a
how
lot
that
about
was,
the
and you said
jobs
no
data
way.
that's out there. Can
You
you
count it
give
and
us a
say
sense
no.
of what you're looking at to
Well,
track
he's still
inflation in the absence
quite a
of
ways
government
off here,
data?
and he's about to hang it up.
So it's a lot of things, and it doesn't replace government data.
If he goes
You know,
past-
you know all of these.
if he goes past
It's,
3,
I'll
then I
just
know
mention
he's placed
some
a
of the
bet.
many names, Price Stats, Adobe, and others,
Why is
for
he-
wage inflation. There's ADP data. On spending, you're going to ask about spending at some
Someone
point.
ask
There
him
are
about
lots of
the
other things
jobs
we
that
look
have
at,
been
but
axed.
it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture again,
I was thinking the same thing, Cheese. I'm
material were
like,
happening
why is he
with
saying
material developments,
stocks?
I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this.
I don't know why he said
data is not
Adobe.
available.
It's kind of weird.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our
temporary.
jobs.
So let's change our policy
Every scrap of data we can find, evaluate it, and think carefully about it,
and give the
that's our
market
jobs. That's
completely different wording than.
If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if?
What is that? What are you saying now?
You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's.
You literally said 10 minutes ago. Certainly, it's not a foregone conclusion. Certainly, and I'm adding to that. Certainly.
Pretty big layoff announcements coming from Amazon and others.
I love this guy. He asks the greatest questions.
Discussion at all that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it.
Far from it, he said.
Health premiums that are going to possibly be going up quite substantially.
25 or 50.
Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but
No
we're watching
shit,
that
Sherlock.
really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are
Rip
if you
the
listen
next
to
Fed
the earnings
chair,
calls or the reports of
because that person's going to have to deal with
public consumer
job loss because of AI.
Many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower cost products, but that at the top people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward. Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last two meetings, and there was a sense like, from some, let's pause
Stadium
here.
in the air.
And
Yeah.
a sense from
Well,
others.
no, not a
wanting to go
stadium.
ahead, but that's why I say
I saw
differing
the
views, strongly different
rendering
views.
idea
And so on
of
that division, then you're talking
housing.
about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper
Muff me.
philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through
618
through all
fib
federal
level
reserves.
holding here.
People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut two more times. And, we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think.
They're not freaking cutting in
and
December.
Again, you've seen it in the September Summer of Economic Projections. You've seen this in the
Merry
public
Christmas
remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this
let's
rate
hear
cut
it.
do to
Wow.
improve the job market?
So I think there are two things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's two things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to zero. So maximum employment doesn't, on a sustainable basis, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates, and we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were, and that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, they've been coming into effect consistently in, February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think, some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff
29.
inflation. As I mentioned, non-tariff inflation is
30.
not so far.
Oh, he's hitting him hard here. 33?
Are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation
30.
that we had in
34, 35, 30.
Because, you can say that prices aren't going up as much, but that doesn't mean people aren't.
This is the home stretch.
Prices from the
Someone's in the back saying,
2 or 3
5
years ago,
more!
they are, and that's
5
I think, a large
more!
part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even
Can someone say
and
that-
it's nice that that prices are not going up as fast as they were, but they're still much higher.
It's not
than that.
38.
And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets
He
are
did
or
10
close
in
to
that
being
sentence string.
overvalued at this point?
It's not over 40.
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime.
What's in airline news? FAA is issuing a ground stop at Newark Airport and is citing staffing
You don't
issues.
see too much leverage in the banking system or the financial system.
On the Bloomberg
It's a
Wire
mixed
on that
picture,
headline.
but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
He doubled up there.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different.
So
in the sense that
he's
these
going
companies,
over
the
his 30
companies that are
minutes.
So highly valued actually have
And he
earnings
also
and stuff
said
like that. So if you go back to
inflation
the 90s and the
10 times in one
they were-
sentence.
These are ideas rather than companies, and we're so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing.
I think the over is good. I think 40 is part of the 40
the
plus.
investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer
No
spending
shot it
also,
gets
though,
50.
has been, is much bigger than that and has been growing and has defied a lot of negative forecasts, continuing to do so this year. Consumers are still spending. Now it may be mostly
Nothing ticker BBAI, Bravo
maybe
Bravo,
skewed,
Alpha India. The
consumer
social
spending,
media
and that's a
circulations
big,
on the
big
name.
chunk of what's going on in the
Representative
economy,
Lisa
bigger than-
McQueen has
substantially
purchased
bigger
another
than
50,000
AI. You
in
can point
BBAI.
to growth. I mean,
It's
actually,
now being circulated.
You may be growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course that will reverse. But, you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information and you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come up, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, so I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs.
I've just seen recent activity
I
at
also just
highs for
wanted to ask a
BBAI.
question. I think several years ago you said the overall amount of
And a
capital in the
representative
system was about
disclosure
right.
circulations
As the
on
Fed
that.
moves
Bravo
forward
Bravo
with
Alpha
a
India.
revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to. I know those discussions are really just getting going.
Luke?
They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Whoa, CMBA, what the hell?
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating? And who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor
So
market?
we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, in no story, you can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation.
He went to 40
is very low.
inflations and just stopped.
And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney. Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve,
41?
each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
The real person
Davis,
power,
Agence France
the one
Presse.
that keeps calling
you
out
had
questions.
dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing, and as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined.
Oh my gosh!
Significantly since
Now he's
April.
going for the 50.
And if we do wind up resuming rate cuts,
Is it 44?
At some point, I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation.
Oh my God.
On its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under quite challenging circumstances and doing the best we can.
We'll go to Jennifer for the last question.
Last question. Here's the home stretch. Can you get 50?
Jennifer Schonberger with Yahoo Finance. Both regional and large banks have taken losses on loans given delinquencies on subprime auto loans. JP Morgan CEO Jamie Dimon warned, when you see one cockroach, there may be more likely. I'm curious how the Fed is looking at these loan losses and if it poses risks to the financial system or the outlook for the economy. Is it a warning sign?
It's in review here.
We're obviously we watch these things very carefully, credit conditions very
That
carefully.
one's in.
You're
This
right.
one ain't.
You've seen rising defaults in subprime credit for some time now, and now you've seen a number of subprime credit, automobile credit institutions having significant losses, and some of those losses are now showing up on the books of banks. We're looking at it carefully. We're paying close attention. I don't see at this point a broader credit issue. It doesn't seem to be something that has very broad application across financial institutions. But we're going to be monitoring this quite carefully and
Look at these
and making
idiots,
sure
man.
that is the case.
Hedging 3 times.
Many of you yourself have said that we're in a bifurcated economy right now with high net worth individuals continuing to spend with the lower income pulling back. How much of consumer spending continuing hinges on the stock market remaining strong? In some odd way, does the market help keep
I saw
the
that one,
economy
freak.
buoyant?
So there's some relationship there, but remember, the more wealth someone has, the lower an additional dollar of wealth matters. So your marginal propensity to consume declines quite dramatically as you reach levels of stock market wealth. So, the stock market, it would affect spending if the stock market went down, but it wouldn't drop. It wouldn't drop sharply unless there were quite a sharp drop in the stock market. People at the lower end of income and wealth have a much higher marginal propensity to consume.
So with
of
BP.
an incremental dollar of income or wealth, but they don't have the stock market wealth. So I think it's certainly a factor supporting consumption
Look at
right
the
now.
squeeze going on here.
But and you would see it if you saw a material correction in spending, but it wouldn't be. You shouldn't think that it'll dollar for dollar stop consumption, because that wouldn't be the case. Thanks very much.
45. 45. Actually, I didn't back. Oh, hell. We're not going to push through it? Oh, geez. No, we're not. All right. Well, it's short-lived. So. It's the first time I bought this buy in probably 5 years, maybe. So tight. Calling it. I'll take my $500 and run for the hills. We're raiding space, man. So sick of today. Oh, now things are starting to move. WKEY. Oh, that hurt my shoulder. Ow. How do you always win? Well, it was kind of a shitty day, honestly. I had those NVIDIA calls. They were printing like nobody's business. But somehow I got filled under intrinsic value, so there's that. And then I gave it all back with some shitty trades, basically $3,000 worth. Then I spent most of the day break even to red. And then I'm up $500. So today, wait, Ashton, wait, tell the opposite story again. Shut up, cheese. What, Salt? Wait, what? For whatever stock he wants and 15 for PSTV. Wait, whoa, 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 whoa!
$5 to a dude kit for whatever stock he wants and $15 into PSTV for me.
PSTV. $15? Freaking degenerates, man. Wait, how much you give? No, you gave 1,500 bits, which is $15. So you mean $10 for you and $5 for dude? I see what you did there. I see what you did there, Salt. Trying to make me spend $5. Jeez, this guy. You're getting 15 of this for... Jeez. 0.55. All right, Salt, you're in. Hang on. Dude, have yours ready. Salt Life of John. 10, 29, 25. We got 15 of that. 0.541. Boom, you're in. Dude, what's yours? Is Dude even here? I'll give Dude the $5 credit if he's not here, Salt, obviously. I don't think he's here. All right, remind him tomorrow. Well, or tell him, because he's not even aware right now. But remind me. All right. Like I was saying, we're gonna raid space, man. What are we paying for it? Shut your mouth, Sue. We're gonna go back to playing whatever turn-based Chinese legend era shit game you're into right now. You should get naked at the end of every stream like Stocky does. Listen, if I had a $20,000 day, I would be naked and banned right now. But right now, $500 doesn't even get my nipples hard, okay? That's where we're at. Shut up, life. All right, peace out, everybody. See you tomorrow. Hopefully we get a better day now that this bullshit's over with. Peace!